I'm just laughing. Blue Fielder. Good morning, everyone. Good morning. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday, the 6th of October. Thanks to one of our new members, Scott. I'm going to have a hard time pronouncing that last name. Zelnikar? Zelnikar? Anyway, that non farm payrolls number, I haven't confirmed, but I trust Scott has it right. Those numbers are wacky. Those are seasonal workers going into the holidays. The big increase was actually a negative number for ongoing or new jobs, new positions, permanent workers, whatever you want to call them. So that's always good. Your participation in the markets is what makes the trading room so good. It's about teamwork. I really appreciate that. So thanks for all of your participation. Yeah, the markets are lower, but they are zipping higher here. We got down below 420 and the shorts started covering. We're at 422 now. Big reversal. All right. Okay. All right, we got a couple of minutes to go for the opening bell. Let me just get Woody up and running here. So shorts are covering. We are rapidly rising. We got the dollar, the 10-year, the VIX backing off. VIX is still hanging in there. Volatility is probably going to stay pretty high today, I would think. We're looking at a implied range of about 0.8% today, same as it's been most of the week. Mic check, mic check. Am I good? All right. Let me get Woody up and running. All right, we got less than a minute to go. Let me wake up here. Too busy talking to Blue Fielder. All right, let's get ready for the opening bell. First 15 minutes, I'm not doing anything except taking profits off the table where applicable. Don't have any puts on, unfortunately. Okay. Seconds to go. All right, we're expecting volatility today, so keep that in mind. We got buyers stepping up. We got a gap down on Microsoft. Buyers stepping up. Okay.
Low tick alert -800. Extreme low tick alert.
I expect volatility in the first few minutes of the trading day. Gaps lower are, I don't know, they're going to get bought. Let's see. Let me keep an eye on Tesla. Tesla was above the 50-day on Thursday, closed above the 50-day, looking for a bounce in Tesla. Does anybody have the scoop on when they're going to sell their less expensive Tesla? All right, all of these are bouncing now. All the FANG stocks are bouncing. AMD, shorts covering, ripping back up from 102 all the way back up to 102.70, 102.80, quickly accelerating to the upside. All righty. Good morning. Our Microsoft, nice bounce. Okay, most stocks are seeing shorts covering after a little gap down. All right, let's just very quickly check what sectors are the strongest. We've got 90% of sectors are red at the moment. Expect that to change. Small cap energy, metals and mining, and crude oil are higher. So is VIX. VIX is fading. VIX is up there 19. All right, so far, very messy open. All right, let me just check. See what stocks are moving here. All right, SMCI, I was looking at that for potential trade. SMCI, Supermicro. Okay, that's hanging out near 284, 287. Okay, Supermicro. All right, Microsoft back up to closing levels yesterday. That was a nice little short covering rally back up to the high at the close. Microsoft looking for a follow through. AMD looking for 105. AMD looking for 105.
Low ticker at minus 800.
I expect choppiness for the first half an hour, 45 minutes. It is a Friday. AMD still going here. AMD. I'd be taking. I have next week's actually the 20th calls. Looking for this to get to 105, maybe 106. So 50 days up there. I'm gonna keep it light and tight today. 50-day is at 106.13. I believe Money Magic's level is 110 over that 105. Above 105 gets you 110. The next level resistance, 103, 105. All right, so those were adjusted. Those numbers are adjusted. It is 105 now. Keep an eye on 105. AMD if you're trading it. All right, so AMD pretty active this morning. AMD. Okay, there goes AMD. Yesterday's high on a gap down. The previous day's high was right around 104.40. Hope everyone had a good evening yesterday. Advanced Micro, S&P still chopping around. All right, we'll come back to AMD in a minute. S&P on the gap down. 4,200 is a big level. A lot of puts down here. All right, S&P rolling over again, testing the pre-market low was around 419.50, 419.60 for SPY. Let's just keep an eye on SPY.
Low ticker at minus 800. Extreme low ticker at
All right, expect more weakness for now. Novo Nordisk's on the move. Novo Nordisk on the move.
It's interesting. EMA, Hartnett today, this call, he's been pretty bearish overall and says that once the recessionary bond and market activity works its way into the data, that bonds will rally big and will be the best performing asset in the first half of next year. You buy it?
No, I think we're normalizing after years of bonds were low. And David, anytime you mention what Carl just said, there'll be some deficit.
He does make that point that you got 40% of the global population going to the polls next year. And that's an environment in which austerity is not going to be popular.
Well, what I'm kind of always confused. Why don't these countries, the dollar's been up against every single currency in the world. Why would you not buy our bonds? Now, China, I understand. I think China's worth watching because China may be doing things that are not necessarily in its interest. Well, it's in a different as part of
All right, so we continue.
I'm worried about war. China.
No, not on a daily basis. I got a list of things that come before that.
You do?
Yeah.
Can you give me a couple that are?
Sure. Scaffolding really drives me crazy.
Umbrellas on the sidewalk that they hit you in the
That
head.
one not as bad. No, I mean that's for me it's I'm not worried about crime. I'm worried about scaffolding and that just drives me crazy. And
Losing one sock in the
that I
fire.
don't like.
Okay.
How does that happen, Carl? That is one of the great
This is like
mysteries.
Seinfeld territory now.
But China war is fairly
Extreme low tick alert.
Taiwan and whether they'll find a way to be able to make it so that they can't control Taiwan like they did Hong Kong.
I'm aware of that as a possibility. I don't believe it's quite as acute as others.
I mean, I keep thinking of that the incredible Henry Kissinger interview. There was a Bloomberg. He's 100 years old, just as sharp as always been. Listen, we have to head this off. We don't want this to come.
All right, expect volatility this morning on that non-farm payrolls. We could be going back and forth a while here. Not making any bets. I'm looking for a trend. Upward sloping VWAP for bullish trades, downward sloping VWAP for bearish trades, flat VWAP for no trade, or just range-bound trading. To start, it is a Friday, so light and tight, a little less risk. We've got small caps need to bounce as well. All right, so I want to say small caps, junk bonds, and biotech all bouncing. All right, so small caps, IWM, Russell 2000, still basing down here at 170. I think it's probably going to take a while. If you look back at March, April, May, that's the last time we were down here. And it took a while. It took, what, 12 weeks to base? So we're only starting around 1. We're at a support level where you would think institutions would be buying. Given the proximity to the end of the year and bonuses, I'm thinking this is a good level. Watching the volume past 2 days has been above average, counter offsetting that selling volume, but still needs to build a bit more. Need to see MACD and stochastics turning. So that was one thing that I need to see to look for a low. We've got biotechs trying to bounce. That needs to follow through. Also need to see Bitcoin, which is a risky asset. People will trade this when they feel like the markets are not going to collapse. And it's grinding higher. I'd like to see it above 31,800, obviously 32,000, but it's definitely making higher highs, higher lows. Bitcoin, you can trade the ETF, some of the ETFs out there like BITO, ProShares Bitcoin strategy. The other assets I'd like to see moving higher are junk bonds. Okay, junk bonds still weak. There was a tremendous amount of puts traded on TLT and junk bonds. TLT gapping down. So that big trade that Gamma, that Brett over at Gamma, Spot Gamma pointed out, that big trade on on the TLT puts, they're probably going to cover a lot of that today. They were short. They were short junk as well. So we want to see bonds bounce. We want to see yields back off.
Low tick alert -800.
Okay. I'm looking for a less risky environment. Now, if we get a big reversal here and manage to close under 4.7%, that'd be huge. Oh, Novo Nordisk, Ozempic, getting a lot of press.
It's on the Bernstein initiation of media names. Big 150-page report.
My God, I chat GPT that thing, I'll tell you.
As the analyst writes, my young associates do not understand how cable remotes work, and that pretty much sums up the future.
Well, I mean, we were seeing I mean, so I saw an Ian Wolf piece saying that people will be
Extreme low, tick
there will
alert.
be people who are happy to pay a huge amount for the ESPN single.
That's not a surprise to anybody that the younger generation doesn't have to use a cable remote and or will not be subscribing to attachment channels the same way we did.
My
which,
kids
of course,
don't have cable.
many of them they
But
don't
they-
want,
they
they paid for, which was the beauty of the bundle
Right.
for those who provide content for it. Yeah, okay. So now what?
Yeah, but Charter, you always have your Charter.
Sure, if you want Charter.
Yeah,
Zumo,
sure.
you got to try your Zumo box. New box.
How about the,
Comcast and Charter. That is going to make it easier to navigate, for example, streaming services. Which
Lily, there's talk about Lily with a pill for Ozempic instead of a shot. Looking good. Can Lily get back to 600?
I don't think they're gonna. Kelsey's mom was on the Today Show today. I don't think this is going away anytime soon.
Chelsea's mom? Reminds me of that song, Stacy's mom. Stacy's mom's got it going on. Opening range breakdown. Yeah, we got another 15 minutes to see if we can correct that. Novo Nordisk on the move.
I mean, he's just remarkable. Can you tell us what the buyer is selling in the market? No, you listen to us. Now, David, do you use Temu? Temu. Temu. You're a subsidiary of the Chinese Duoduo. You want to look at this? Launched in September of 2022, 15% consumer shop with this ultra low price.
Shein is the other one.
Yes, ultra low price.
Flores gonna go right.
Correct. Marcelo Flores
But we should
taking
be-
over as chairman
we
there
saw
of
that.
Shein.
But I think it's worth talking about because when people trade down, they're not just trading down to the Dollar Tree and Dollar Store anymore.
All right, so Novo Nordisk following through. Lily, do they have a pill form? Is that what they're talking about? Pinduo dual hire? Good. Thank you, Corey. Thank you. I'm not doing anything. Okay. So just to be clear, it's a Friday. I generally don't trade that much on a Friday anyway. I'll talk you through some setups, but I'm taking less risk. I don't trust the markets right now, mainly because of what I just got finished talking about. IWM needs to turn. It's basing. I see that basing for another couple of weeks at minimum before we do anything substantial. I want to see junk bonds, TLT moving higher. I want to see 10-year lower. I want Bitcoin to continue higher. The good thing is it's this time of year that we start to see some bullish activity. Still haven't seen it yet. Not enough anyway. Not enough. I'd like to see a lot more activity on the bullish side. Calls overhead. I want to see 4,300 taken out, 430 SPY. It's a lot of ifs and a reason why I don't want to take on any additional risk right this minute. Let's see a number of stocks trading above their 50-day. Okay, back down. See, we wanted this higher. Okay, we wanted to see more stocks being bought. Want this number to be up near 15. It didn't. It pulled back. So
Tick alert minus 800.
there's just no reason. Well, there are some reasons, but there's no reason for me to take a ton of risk.
Maybe we get a settlement to the strike.
I'm betting on Ford, them coming and table with Ford because Ford's not fired UAW or something cheap. It matters. Ford also has those campaigns with Big Hen about how much they like the workers.
We're watching, obviously expecting an update from the UAW today. Check bonds today as well. We will hear from Waller at 12 o'clock. For the time being, you see the 2-year, the curve has been all over the place, but the 2-year somewhere around 510. The 10-year, pretty much the highs of the morning at 482. All sectors red except for healthcare. Some big weakness in utilities. Down 150. Don't go away.
Okay, so Novo Nordisk, looking for that to be near 100 by the end of the year. Novo Nordisk, that pulled back over the last few weeks. Some buyers showing up. Got a nice hammer or a hanging man candle. Technically, I guess you could call this a hammer because it's close enough to a pivot low and we're reversing. The concept, buyers showing up at the low of the day, pushing it up into the upper half of the daily range. Generally, that is accepted to be institutions. All right, so we're still seeing a lot of volatility. I'm anticipating volatility today. You're trading with higher risk. The markets could drop pretty quick. Volatility is high. VIX is back to 1937. Your choice, but I am just taking it easy right now. I want to see more. I want to see all of the FANG stocks go on buy signals, not one or two. All right. So, and I want those buy signals to be mirrored with 15, 30, and 60-minute turning, or giving us green signals. I don't see that yet. I'm not going to put money to work just to put money to work. I need a strategy to support an idea. We've got a lot of penny stocks moving. We've got the Chinese stocks are more active today. All right, so if you have any Chinese stocks, just check out your positions. You might have something that's doing well. Maybe you want to take some profits off into strength. Okay, Pinduoduo on the watch list. Pinduoduo, let's see, PDD. All right, that looks pretty good. Nice little setup there. That looks like US Steel. US Steel yesterday had this nice pop sideways price action on Monday. Morgan Stanley put this on their top 10 list. Yeah. You know what? I was watching that I think it was on Netflix, The Eagles, the series documentary, rockumentary, whatever you want to call it, on the Eagles. Man, that's some great musicians there from different bands all getting together. You know, when Joe Walsh joined them a couple of times there, really enjoyed that guitar duo. But yeah, I love the Eagles. Love the Eagles. Love Crosby, Stills, Nash and Young. Love those harmonies, you know. Cruising down the road with the top down convertible or the windows open, whatever. Cruising up Highway 1. Yeah, I was listening to Bryan Adams too. I really like Bryan Adams. Don Henley, all those guys. Really liked what's his name? What's his name? I had some really weird taste in music as a kid, you know. James Taylor, and I'd be listening to Ozzy, you know, Iron Man. Used to drive my stepmother crazy. I'm just watching the markets here. I'm not doing anything. I think it's wise to wait for VWAP. I think it's wise if you wait for VWAP at the moment. VWAP is flat on the SPY so far. Let's look at Tesla, Microsoft, etc. Those are still drifting lower. Microsoft, flat, AMD. All right, so if we get any kind of follow through, we'll see VWAP move up or down, and we'll see price action along with volume pickup. Right now, I don't see that. Okay. What else is going on? Novo Nordisk and Lilly. Okay, difference. You can see the difference immediately. VWAP up and to the right. Let's look at Lilly. So these seem to be in play. VWAP up and to the right. So focus on healthcare, in particular pharmaceuticals, Merck, Johnson & Johnson. What's Gilead? So Novo Nordisk, NVO, and Lilly look the best so far. What about AstraZeneca? Okay, Biogen. Biogen up and to the right. Amgen up and to the right after a little dip. Okay, so okay, so some pharmaceuticals are in play. Snowflake, yeah, Snowflake is in the Nasdaq, not the Nasdaq, the New York FANG index. Okay, that looks pretty good, John. That looks good. See what you're looking at. Now, the caveat, it's range bound and probably gets stuck near the 200-day. So if I had shares, I'd be selling covered calls. I'd be looking for moves like today up to the highs. Maybe it gets to 155. Snowflake. I'd be selling premium at the high. That's what I'd be doing.
That, are really targeted towards that value consumer in Walmart and Target, respectively. Those businesses were down double, kind of big double digit. And so that middle income, moderate income.
I had a member down and out because, he's been long since the 2020 highs. He didn't take any stops. And I just keep thinking about his predicament. But, selling at the low, yeah, we could push a bit lower. I can't advise him because I'm not a financial advisor. I can just tell you what I'm doing. And looking at the chart that I posted this morning, this time of year, 2015, August 2015 into the lows, we ran up end of year, then we dipped again. Kind of reminds me of that. A little different circumstances. Back in 2015, we had the commodities crash. We had the Fed and Western banks printing cheap money, which led to trying to get China to work on their currency. As an impact of all of this happening, China economic activity slowed down, and the markets rolled over. And then if you look at 2015, 2016, we had this rally. We had this double bottom and a rally in October. Still haven't seen a rally. And then we kind of faded into November, December. So this rally and a rally this time of year would be beneficial to big traders for these institutions like Morgan Stanley and Goldman Sachs, et cetera, JP Morgan. For their bonuses, they want to outperform the S&P 500. So watching for activity, that's just not showing up yet. The only reason I'm showing this 2015, 2016, we went into an election year. That was 2016. That was what? Hillary and Trump. It's just too crazy right now. 4,200. We keep every time we come down to this level, we wind up creating a wick. Are we going to create a wick again today? My guess is we're going to. If you use a 200 SMA, we're above the 200 SMA. But if you use a 200 EMA, we're below it already. Okay, so just keep that in mind. All right, here's a 200 EMA. and prices below. So the caveat for the bulls right now is this the low? We don't know. Small caps are still basing. We've got lower highs and lower lows. We've got the 921.50 day all turned downward. So price action has a lot of work to do. Okay, we got below the 200 day over here in March, and we surfaced to move back in the opposite direction. MACD and stochastics are set up. So it's just a matter of when do we run? When do we run higher? Do we close the week on a bullish candle? That would be the best case scenario. I don't mind missing a couple of days of trading. I'm looking at the FANG stocks. I'm looking for all of them to go on buy signals. Not yet. Not yet. So Microsoft looks the best so far. Maybe Microsoft follows through. Amazon looking pretty good here. Okay, with Amazon, with that non-farm payroll temporary workers number, I'm seeing Amazon moving higher. Amazon's coming off the low on a buy signal. Let's see what Amazon looks like on the daily. Okay, still basing here above the 200. Amazon. All right, expecting volatility. Could go either way. Could go back down to 4,200. Rivian down at 17. Wow. Rivian got destroyed there. If you have puts on Rivian. Google. Average hourly earnings actually dropping. Labor force participation rate is up a bit. I think people are pretty much on the same page. Some are working, part-time jobs to try to make up for all of these expenses. I went to the grocery store yesterday again, and was a little shocked. I mean, I got maybe a dozen items, maybe some ice cream, Haagen-Dazs. That was probably the most expensive thing in the basket. It was like $87. It was like ridiculous, twice what I was normally paying. All right, Google pulling back now. I think there's a higher likelihood that markets continue to pull back. Walmart dipping here. Walmart. Walmart, big red candle. Walmart, ugly.
No, but it's still higher. And actually, Mary Bailey, San Francisco Fed president, did speak about this, how the market is doing the Fed's work, and maybe the Fed doesn't have to. Here's what she said.
The bond market has tightened quite considerably, over about 36 basis points since we met in September. Well, that is equivalent to about a rate hike, right? And so then the need to do tightening additionally is not there. So from my own perspective, that's what I look at. You know, that my job as I see it, our job as I see it, is not to tighten, just do our part. It's to watch financial conditions, because monetary policy works. We
All right, energy.
interest rates. If financial conditions are sufficiently tight, our work is not necessary because we don't need to boost them more.
That's the case, David, for not having to do more because the market is doing more. But there will be those on the Fed that will look at these numbers and think, we have to make sure the inflation fire is put out. That is job number one. It is task number one. It's great to see it come down. It's why there's going to be a lot more importance on next week's CPI report ahead of the Fed meeting. But they just have to make sure. And with an economy that's firing like this, look, you talk to, you're following the deal market. Are we seeing behavior like we would see after 525 basis points of tightening? It's not changing behavior totally in some of these industries. And usually when interest rates go up like this, it does. And so they might have to do more.
They might. And certainly there's an expectation. The other few of those areas.
All right. So Walmart looking terrible.
Rate there that you see particular deal. Will something break? You know, is there
Yes.
going to be something we're perhaps not anticipating, as there was in the spring,
Yep.
with a handful of the banks, that is going to scare a lot of people when you have a move like that. So to Carl's point, not that significant.
All right. Walmart with a really nasty looking candle there. All right. Let's see what's actually moving today. I'm expecting to see Lilly, Johnson & Johnson, Merck. Merck looking better. Okay. Amgen. Okay, that looks good. UNH. Lilly. Lilly looks really pretty. Vulcan Materials. 3 white soldiers. Vulcan Materials.
For more on the market reaction this morning to the jobs number, let's check in with Bob Pisani, see what's moving here. Bob, do you think it's orderly?
Yeah, yes, and I too am shocked by this number, 336. The down on the floor, they were talking 140 to 170. They wanted to be just below the expectation, and particularly, Sarah, the incredible upward revisions in July and August, really, really strong. So job market strong, but there's a curious reaction in the stock market. I want to show you something. The usual laggards are there. So utilities, banks, REITs, some of the consumer. The reason consumer discretionary is so weak is because Tesla's down 3%. That is an outside weighting in consumer discretionary. But look what's holding up comparatively better.
Low tick alert minus 800.
Commodity-based things are holding up. Energy, China.
Lilly.
Metals.
Really pretty looking. 3 white soldiers on Lilly as well. Vulcan Materials, 3 white soldiers. Got some nice reversal patterns playing out. Okay, S&P, nothing yet.
Extreme low tick alert.
Okay, most bearish trades are working at the moment. Majority of sectors are still not turning substantially. Let me go take a look at those real quick.
So what does this mean? It means consumers still have jobs, but inflation is going down. This would generally be good news for certain sectors. It would certainly be good news for cyclicals that are holding on. And even some consumer names, Home Depot is holding up well. Industrial Caterpillar is actually up in the Dow this morning here. So I'm not trying to sugarcoat this. We were all
Okay, SMH, stochastic still rising. So that's telling me net, on the net for the last 2 weeks, most closes were in the upper half of the daily range on a rolling basis. We're seeing biotechs look a little better, but not having turned yet. Industrials still moving lower. Nobody's buying industrial equipment. Some like Mondo are. Technology, looking for that to continue. Consumer staples getting hammered. Utilities getting hammered. So much for the reversal on utilities. That pain trade not working now. XLV healthcare looking better. Retail. All right, these are probably going to get worse before they get better. Okay. All right, so we're back to this kind of look on the day, telling you to be cautious.
I think you're going to stick. Bailey had it there. You had the right. As always, you brought up the right quote there. That's, I think, the consensus at the Fed right now.
There are many Fed members that want to keep raising rates on that committee, including some of the governors. Like,
How about the one guy? What does he want?
Low tickler
not
minus
sure. I
800.
think he probably leans towards staying. He doesn't want to break anything. He doesn't want to blow up the economy in order to get inflation down, but they need to get inflation down. And they need to send that signal.
But it's working. That's the point. That's what the silver lining was today. I'm trying to explain why the market is reacting
After
this way.
the CPI report, it comes out next week on the 12th.
Yeah.
That's going to be more important than this labor report.
Keep an eye on that. I think we're moving in the right direction, and I think we're primed for a rather significant rally at this point. I think we're moving in the right direction. We're bottoming.
Stop the
The
timing.
problem is, here's the problem, as Tom Cullen used to always say to me, oversold is a condition, it is not a signal. So we are so, everybody keeps messaging you, Bob, look at the RSI numbers, we're so oversold, this is what we have to buy now.
That's true. I agree with Pisani. I mean, we got to see RSI and stochastics and everything turn, and we're still way oversold, but we don't have a signal yet.
We haven't seen these kinds of conditions in recent utilities, I don't know ever, but certainly decades. And yet, not going down. No.
You could say the same for bonds. Oversold, and guess what?
That's right.
Yields keep
There
moving
you
up.
go.
And that's the problem. Bob, thank you.
Condition, not signal.
Condition, not a signal. Great. Bob Pisani. As we head to break, here is our roadmap for the rest of the hour. Goldman Sachs chief economist Jan Hatzius joins us here at Post 9 on a jobs day to weigh in on this strong data, what it means for the Fed next.
Plus, a mega deal is brewing in the oil patch. Exxon in talks to buy Pioneer. We're going to give you some details.
Oh, Exxon going to buy Pioneer. Wasn't that in the news before?
As we go into holiday, JP Morgan's Matt Boss is going to join us in a few.
All right. All right, we've got a higher low printing. So from my perspective, I would love to see higher highs and higher lows on some of these stocks, Lilly and Novo. I'd like to see the S&P carry on and make some higher lows, get above VWAP and start to charge higher. That would show me that institutions are not going to wait until 2 p.m. They're going to start buying. We would see that show up in the number of stocks trading above their 50-day. We'd also see junk bonds bouncing, the 10-year pulling back. A lot of conditions need to solidify before I start putting good money to work after this recent pullback. There's still potential for more downside. I see many people talking about puts being bought. on Monster, etc. So potentially more weakness. Let's see. I just mentioned New York FANG index. Let me check that out. 10% weighting in 10 stocks. Okay, this is interesting. I find this very interesting that we're not failing yet. Okay, this descending channel is not making a lower low. We haven't hit that lower channel line. Now, granted, this could be a descending wedge. I could draw a line here, but the point is that a lot of times I'll just start off a pattern. I'll take two highs. I'll look at a low in between, and I'll just take a parallel line. I'll copy it and put it down here and see how price action reacts. Does it come all the way back down to the channel line again, or does it turn before it gets there? In this case, it did. Continues to hold up pretty well. It's only one chart, so I'm not making any assumptions, but look at stochastics and MACD. These are turning, RSI trying to get above 50. A little reluctant, but this is pretty good. We're off 10.5% after gaining 102% from the October-November low. Not too bad from my perspective, not too bad. Yeah, we did talk about the fact that, we have these 10 stocks that are doing well, but the underlying stocks are not giving us a warm and fuzzy feeling yet. I think Scott Z, you were talking about that yesterday. There's still, many of you are thinking the same thing. We need to see the majority of stocks starting to move higher, being bought. That'll happen with good earnings. So we got earnings starting off. When did the bank start? Next week? 2 weeks? Let's see. Let's see, Goldman Sachs. Okay, October 17th. So got 10 days before, let's see, October 17th. That is 2 weeks from now, Tuesday. That's Goldman. What about JP Morgan? That's usually Bank of America and JP Morgan, usually the first, right? October 13th. So JP Morgan reports next week on 13. The banks start to report. What about Bank of America? Bank of America. PNC. October 13th. All right, so PNC and JP Morgan start reporting.
Can you imagine this administration letting a big oil company buy another big oil company?
That always comes to the fore and conceivably will here. This may not have been as far along until the leak yesterday, and typically that does speed things up. And so if you're Exxon and Pioneer and you are talking, and perhaps you thought you had more time, my understanding is they were not quite as far along as we might have anticipated. You do move things up quickly and speed things up. You don't want that uncertainty hanging out there typically. I don't know if we see a sort of, Sunday night board meeting, Sunday night announcement, Monday morning open. But at this point, given I was a bit surprised to hear that things actually were not quite as advanced as I thought, given the reporting now that has taken place. Again, the journal being the first yesterday.
All right, guys, S&P on pace for 5 straight weeks of losses. There are some bright spots, though. Number of stocks hitting some new highs in this down market. We do have Google and Microsoft green, even with the Dow down 225. We'll talk about some names next.
All right, so we need solid earnings to turn this market around. Maybe we start to turn before them, but with JP Morgan and PNC starting off earnings on Friday next week on the 13th, there's others. We really need to hear, earnings expectations are good despite the current economy, something along those lines. We need the Fed to be, maybe they just stick to the same language. there feels like a lot of hopium in the markets. I feel like I'm sort of projecting a little hopium there as well. That with the Fed keeping rates the way they are and yields being so high, we have to anticipate we're going to get that recession, that we've been looking for. Have we started it? Many believe we've already started the recession. Not a good time to start putting a bunch of money to work until we start to see small caps, junk bonds, biotechs getting a bid, multiple sectors doing well. Might just be one of those days you want to, stick your head in the sand and go play golf or something, just not pay attention to the markets. I'm not eager to put money to work where I can't see a clear, defined trend. And not just in one chart, but in multiple charts. I like to follow money flow. I want to see that money flow
Minus 800.
showing up in more stocks trading above their 50-day and turning. That's not happening yet.
Extreme low ticker.
Let's get back to this morning's blowout jobs number showing that remarkably strong jobs market, although the hiring surge did raise the chance of a Fed rate hike in the markets now.
CNBC still not mentioning the temporary workers. I think they have the incentive to try to scare people so that they're tuning into the broadcast so they can sell, advertising to more people. I mean, if they started talking about, oh, it's just temporary workers, people would be less concerned. They'd sell less advertising. That's just me thinking.
Wait to see, and I don't know that they're going to overreact to this number. It feels high to me. I don't know if you remember there was a time back in November.
I'm surprised Leisman isn't picking up on it. Maybe they're not letting him. There goes Microsoft about to break out here. Microsoft about to go. Microsoft's about to go. Microsoft's about to go here. So is Google. Google too. All right, AMD. Okay, Apple. Meta, looking for a follow through. Okay, Tesla turning the corner. Tesla. Ooh, that might be worth a shot. Tesla. Today's options, maybe the 256 or 258s. Middle of that, maybe do they have 257s? Maybe the middle of that gap down. Tesla. Okay, AMD trying to go. AMD. All right, game on. Need to get VIX to drop off. Watching the dollar and the 10-year. 10-year dropping off. I can't see how the 10-year is going to stay up here as long as it is, but hey, it is what it is. as a friend of mine used to say. It is what it is. There goes AMD. AMD going. Okay, AMD, Apple. All right, starting to get wheels up.
Mid-July to mid-September, the whole story was the combination of surprise issuance from the Treasury and stronger economic growth. Remember that upgrade we've had to the third quarter GDP, which has really stuck around surprisingly. So we're still at 49. We'll do probably our rapid update over the weekend to get 12 to us. So that's 50. The other 50, actually, I think Dale's in the light, is from the Fed, right? So the Fed changed the whole outlook. So 50 and 50 gives you 100 right now. And we'll see, we may get more here, but I don't think the Fed needs to add on more here in terms of what it's already added.
I think you can make a strong case for hiking. I think you can make a strong case for staying. And they're going to make those. I mean, there are now decisions inside the Fed about what to do next.
All right, there we go. LETS Geo, let's go.
We watch the language very carefully. I don't know where Williams stands on this. My guess so far is Williams has let it ride.
Oh, that's right. There's a bunch of speakers today, right? That's right.
We're listening to Chris Waller. And then you guys were asking what's the big guy thing. And I think the big guy wants to take a step back and just watch this thing play out for a bit. He doesn't want to break it, but he has also been seriously on the record saying he is not the guy that's going to leave here with inflation still out of control. He's been very definitive about that. He's got a sense of his place in history on this thing. And I think when you walk into the Fed's, you know how it used to be like, don't F up was the one thing they told you? At the Fed, they say, don't be Arthur Burns. That's the thing. Don't be Arthur Burns, which is the same as don't, rise up.
Right.
Right.
Especially on inflation.
And he's not going to be that guy.
But we don't get declines next year as much as we thought in rates.
That's what's happened. We've got the 50 basis points off. I have to look at the whole curve right now.
All right. AMD looking for 105. We're getting close. 105. Microsoft going.
In June, 43.39 stay the same. So call that even. As the year goes by, they are increasingly baking in that quarter point cut right there. But just a quarter. And I talked to Paul McCulley. He said it's very simple.
There goes Apple. There goes AMD. All right, so we're starting to cook now. All right, SPY on the move. Cool. All right.
All right, Steve, thank you. A lot to talk about. We should come down for more.
Well, I would when congestion pricing is in place.
Stop it.
And the fact that this absolutely
Thank you, Steve. Overall, it's been another tough week for stocks on the back of this higher move in bond yields, but a host of names posting big gains and hitting new highs. Tom Chu tracking those for us. Tom.
All right, so the positive news here is amidst this possible fifth straight week of losses for the S&P 500 is that we do have a couple, at least, just two new S&P 500 record highs that have hit so far this week. Now, the interesting part about the new highs that we've seen and some of the outperformers has been what parts of the market they come in. So if we take a look, first of all, at the two new record highs, it is, for the most part, what you might think about is maybe defensive in nature and more of the exchange sector. So talk about, at least for now, the shares of McKesson, which are to the record for the upside here. Also, you have shares of CBOE Holdings, a big exchange operator, that have also hit record highs so far today. If you take a look at the biggest S&P 500 gainers so far on a weekly basis, Market Access, big platform builder trying to trade the bonds, maybe not surprising given the fact that we see it in bonds, interest rates, and everything else. Edwards Life Sciences, CME Group, exchange there, about 5%, and Lamb Weston, frozen foods, especially French fries, at 5% right now as well. After some of the bigger laggards that we've seen over the course of this past week, you've got to take a look at some of the names that we've seen. Many of these media telecom names have taken 52 weeks ago, but look at the utility companies specifically. AES, NextEra Energy, both down about 20% and 17% respectively, and then Macquarie on the back of it's being viewed as a more disappointing earnings report this week, down 18%. But perhaps the most important one, David, here about this whole story is the mega cap technology stocks that have driven the upside. They have generally been a little bit more stable.
All righty, on the move now, starting to move. We're getting some follow through, more and more people buying. If you have today's options, make sure you're paying attention because we are looking for levels to get touched overhead. 105 is what I'm looking for on AMD. 105, 106 would be nice. AMD on the move. All right, S&P, this is exactly what we're looking for. Half a dozen or more candles. VWAP starting to turn up and to the right. Moving through pivot levels. 4250 is a level. I believe 42, 4300, 4313 are resistance today. Can we get to 4300? That'd be freaking awesome. Excuse me. All right, look at the New York FANG index now. Look at New York FANG index.
High tickler plus 800.
New York FANG index, pretty compelling. I know it's only 10 stocks, but still looks pretty good.
strong number?
Well, the model is really in GDP, so I think there are good reasons to think that fourth quarter GDP growth is going to be a lot better than third quarter. In part just because, again, there's some payback for a very strong number. Consumption is looking weaker. We made from student loan payments. I don't think that necessarily means a big weakening in the labor market. I wouldn't say the unemployment rate is likely to increase significantly. But yeah, payroll growth probably somewhat weaker than the very strong numbers we had.
So the market is now recovering. The stock market, the Nasdaq is positive. Bond yields come off the highs, and I wonder if, after getting over the initial shock of just how strong that headline jobs growth is, the fact that wages were weaker and year over year posted the biggest decline since I think 2021, the biggest increase since 2021, is taken as a sign that maybe the Fed won't have to keep hiking. Right? Is that the right takeaway?
I think that's the right takeaway. And yes, I think if you have strength in job growth, but actually no big change in labor market slack, the unemployment rate was unchanged. And as you say,
All right. Nice looking buy. Buying going on here. Looks good. Let me see what we're starting to do here. All right, we're putting in a hammer. Another hammer. It's like 3 in a row. 3 hammers in a row. Nice. Okay, let's get this up to 15 or 20%. That'd be awesome by Monday, Tuesday next week to see this near 20%. Been using this strategy for 20, 25 years. When the number of stocks trading below their 50-day is at like 90, 95, 98%, start looking. I misspelled Johnson & Johnson. Just noticed that. Can't have a misspelling. Can't have that. That's better. Okay, that's better. Can't be having misspellings. All right, so look over here in March. I mean, how many times we hammered? 1, 2, 3, 4, 5, 6. 6 wicks and 1 hammer. These are more like clubs. Very large body up in the upper half of the range. But the idea with wicks down below, that's where buyers showing up. And we never took out the low there. We're seeing wicks here too. 4 wicks. Technically 2 hammers, it looks like. A third one right there. It's kind of more like a club. That big bullish looking candle that we saw on Wednesday. All right, so we're getting, I keep saying this. I know I have to come up with something else. We're getting close. We know it's October. We just need to see that IWM turn the corner. I don't trust IWM. We could see 167, 3 points lower. I'd rather see this base, keep these wicks going, and start reversing the other direction and buy and pick up like it was on Wednesday, Thursday. If we can get that, and then we can add to junk bonds, getting back above key moving averages, the 200-day, that would be helpful. And if we can get IBB to turn. All right, IBB looks like it's basing down here. LABU, what's that doing? All right, LABU, this needs to catapult higher. All right, AMD doing very well here. All right, AMD looking good. We got this higher low, looking for a higher high, looking for a push through the 50-day. All right, AMD. Go ahead, Chuckles. Let's get this going. AMD. Okay, you got Meta, Scott. Okay, Meta. Yeah, all of these look good. Yeah, it's in a range bound condition. If you go to a shorter time frame, like 4 months, a lot easier to see. Okay, we need to push off of the 50-day here. Meta, okay. Okay, need to see some higher lows print here and another higher high. Need to keep this going. SPY needs to keep going. We need to take out the pre-market high, 425.60 or so. Okay, S&P. All right, VWAP turning up and to the right, volume coming in. That's beautiful. Now, can we follow through or are we going to fade right now? Non-farm payroll came in. We're into that candle on this move here. We need to get back up to the pre non-farm payroll number, which was 425, 424, about 424.80.
Yeah, thanks for having me on, Sarah.
Super Micro, looking good.
Actually recently put out
Meta, buy signal. That's what I'm looking for. More of these stocks to go on buy signals. Intel turning. Microsoft taking out the high of the day. Looks good. Microsoft, thank you.
We now sit 500 basis points below where we did in 2019. And then secondly, the interest rate dynamic. It's not just housing, it's credit card balances. Remember that low and middle income consumer, they carry balances and it's a lot more costly. That's in addition, I know you've talked about student loans and some of the other headwinds that we have. So for us, you need either total addressable market that's larger or you need trade down. That's one of the things in our survey work that we're really seeing become a much bigger theme.
It's just weird to talk about a weakening consumer on a day where it's up more than 300,000 jobs added. If the mantra has been the consumer's hanging in because jobs growth has been healthy, we still got that.
They are, but what you're seeing is a real dichotomy. So higher income consumer, I think, is holding in. Low income consumer is really pressured by these expenditures. The big five expenditures. So as you think about housing, you think about utilities. For me, I mean, this now makes up more than 300 basis points higher of their wallet than it did in 2019. So these inflationary cost pressures are really weighing. For us, trade down is one of the biggest themes in some of our recent consumer survey work that we're seeing. That would be TJ Maxx, Ross Stores, the Burlingtons of the world. I think you want to be positioned where value is king as well as convenience. The other theme that we're seeing is casual. So as it relates to athletic and active, I think that's a total addressable market that's larger. So we like the Lululemons of the world and Nike as you think about multi-year.
So, okay, total addressable market. I was going to ask you about that. You still like Macy's though, and some of the other department stores?
Look, I think it's a tough road right now for U.S. wholesale, and I think that's what you heard last night from Levi's, and I know Chip was on Jim's show. So U.S. wholesale, the consumer slowed, and that really started in August. Inventory was a year ago caught heavy at a number of retailers, and the brands really pushed some of that inventory back and forth across the wholesale channel. I think you've now seen more of an equilibrium. So I think inventory is at retail.
All right, looking for that higher high. There goes AMD. Microsoft going. Okay, that looks good so far. Got all of these to turn at the same time. Buy programs coming in.
You need a customer pull given this trade down, and that's where I think the off-price retailers are taking share, which makes it very difficult for the department stores and for specialty. I actually think it's off-pricers relative to specialty where you're seeing some of these share shifts happen. So that would be your mall-based specialty retailers, the Victoria's Secrets of the world, the Body.
All right, so AMD.
Retailers on the specialty side are really battling now up against some of the more value retailers out there.
Hey, finally, Matt, just two questions from me to finish up. One is, to what degree are lower gas prices offering some relief to the consumer? And second, what do you make of these early efforts to quantify the impact of weight loss drugs on sectors like apparel?
AMD has an ATR of about $3.75. It's up to $2.24 after dipping first. Looking for more upside on AMD. Microsoft.
Meaning the prices at the pump, they see it, and they recognize the sequential change. So look, any dollar, my point here, helps, and especially for that low to middle income consumer where
Excuse me.
the reality is the low pandemic savings in the midsummer. The middle income consumer is set to exhaust it by the end of 3Q. It just sets up a very tough comparison because they had extra dollars in their wallet for the first 3 quarters of this year. So if gas prices do come down, obviously that could be an incremental help.
All right, there goes AMD. AMD going a bit more now.
On the weight loss side, it's a little early to monitor it. I've seen some of the reports coming out of some of the discounters. It's a little early, in my opinion. I think the consumer still wants newness, differentiation, innovation. That's the self-help that we're flagging with the Lulus and the Nikes of the world. That also provides you pricing power. I think Ralph Lauren fits into that as well.
NVIDIA also, nice follow through. NVIDIA breaking higher, breaking yesterday's evening session. NVIDIA. Okay, NVIDIA. Bitcoin's trying to hang in there. NVIDIA breaking yesterday. Is that yesterday's high? Yesterday's high.
Announcing new leadership at the company. Former SoftBank Group executive Marcelo Claure, remember him, he also led Sprint, will serve as group vice chairman now, overseeing global growth. Claure joined Shein back in January to oversee strategy for the online.
NVIDIA taking out highs for the week.
Shein's valued at around $66 billion. Claure's role will focus on expanding the company's manufacturing.
Volume coming in. All right, there goes NVIDIA. Cool.
I spoke to, remember, Executive Chairman Donald Tang last month. Here's how he described the Shein strategy.
We went back to reinvent and reimagine the supply chain by aggregate and digitize the small and medium-sized factories of those moms and pops and put them together and all on the same software with the transportation vendors, providers, all of that, and to provide the kind of choices that the consumer wanted. So what we do is in every community, every country. We do business, by the way, in more than 150 countries around the world. So when we measure all the things,
AMD.
deliver all the things that according to their choices.
AMD. What are we trading? AMD. We're 67% of ATR, 90% of daily range.
he became an individual.
SPY starting to fade here.
$1 million of his own money in this company, which makes him, I think, the biggest independent investor in Shein. He says as the company expands, we want to be closer to our customers. Local execution of the marketplace was a complete shift. And so basically, as he's grown the marketplace in places like Brazil, they manufacture now in Brazil, and they're closer to their customer, and that's been a big part of his strategy. And as far as some of the questions around Shein, you know that lawmakers have made a lot of noise about where the cotton comes from, for instance, how the factories are used. He told me that
Amazon.
before he invested, visited hundreds of factories in China before coming on board. He said there's no child labor, there's no forced labor. He said he found a lot of small and medium businesses thrilled to have a growing business. Look, I think that this just adds some legitimacy to Shein at a time where they are now one of the top 3 most valuable startups in the world, I think outside of SpaceX and TikTok, and are clearly trying to
Palantir. What's going on with Palantir? Palantir going here. All right, I don't see any news, but there was something mentioned about Palantir related to its software. Palantir. Palantir is going.
He did the due diligence, and it's the same thing I heard. Remember when I did that interview with Jamie Salter of Authentic Brands, who was partnering with Shein for Forever 21? He said, look, we also did due diligence. We have a pretty high bar here, and we're going to make sure they're doing what they say. And that's been part of Shein.
LPG on the move. Okay, that looks good. Novo Nordisk hanging out at the high.
Tech sector is back to buying mode. We'll talk about what Citi sees after a tough September. More on who that is in just a moment. Meanwhile, Dow shaving its losses to about 25 points or so. Stay with us.
Uber, nice bounce in Uber. Let's see what the 60 minutes. Uber looks like a trend change. All right, Uber is near a 60-minute. Looks like it's trying to change trends. Uber trying to get turned there. Uber. Let's see, Uber. It's at the 100-period moving average. 44 seems to be an area where buyers keep showing up. 60-minute, okay, back above the 20 EMA. SPY, we got down below. Yesterday we were above, down below again. Now we're trying to get back above. So it looked like we're basing here over the last 3 or 4 trading days. Can we get above the 20 EMA and turn this ship? That's what's needed. That's what we need to see. AMC trying to take out yesterday's high. Thursday high. Here goes AMC. SoFi. I tell you what, I went to a AMC by us to see, I forget what the name of the movie was. It was with the kids. It was like a Formula One movie. It's about the guy who became a race car driver after doing, playing video games. Anyway, the theater was like, oh my God, such a change. I mean, it was like seats that you would have at home, very comfy seats. People weren't stepping all over you. It was roomy. I think the tickets were, my sister-in-law bought them, but they were expensive. Anyway, I could see how they could change things if they keep that up. SoFi on the move, trying to get back above 8. SoFi turning the corner on the 60-minute. at the high of the day, 786. Student loan repayments starting up again. NVIDIA up quite a bit there. Okay, coming back in a little bit. All right, so that was a nice rally. What's Netflix doing? Netflix at the high of the day, flagging. Needs to reverse and get back above 380, it looks like. Got a lot of work to do on Netflix. Microsoft still pushing. Microsoft up 50% of its ATR, 98% of its daily range. Let's see what Microsoft looks like. Microsoft. Okay, so Microsoft is doing what I'd like to see SPY do. Okay, so here's SPY over here, like the 28th, 27th, 28th, a few days of consolidation. We move above the 20 EMA. 20 EMA turns up and to the right, drops back down, but gets back above. Volume picks up. That's what you need to see SPY do. You need SPY to do this. And the Qs and IWM. Let's see what IWM's doing. IWM. So expecting a lot of volatility. Got some more selling coming in. All right, here's IWM trying to turn the corner. Okay. A couple of weeks ago, we tried to get above the 20 EMA. Failed. This is a downtrend. IWM. IBB, same thing. Another risky asset that needs to turn. We're above the 20 EMA. So it would take about 2 or 3 days to get this to start trending again. Short term, IBB, sorry. Junk bond, same idea. Got to be above the 20 EMA. We gap down, need to get back above. Bitcoin needs to continue this turn. We've been making higher highs and higher lows. Flattened out this week. Now we need to get going. Bitcoin. Okay, let's see what that looks like. Bitcoin. All right, Bitcoin looks okay. Still got a lot of work to do. AMD, Tesla, AMD, we finally got that tag, that 105 tag we were looking for. All right, so if you took some profits, congratulations on AMD. AMD trading 105.13, flagging at the high, trading 91% of its daily range, 67% of its average true range, ATR. All right, so giving you an opportunity to reduce your risk if that was your goal. A nice little bounce there. Novo Nordisk, looking for that to continue higher. Eli Lilly, that looks good. Those two held up early. Lilly looks like it wants to keep going. Okay. Nice follow through, maybe. Okay. Okay. Lilly announced its details of its presentations at the ESMO Congress recently. Talked a lot about treating diabetes, treating obesity. Okay. That's at the highs right now. There's no hurry. I mean, we could see a follow through in Lilly next week. Okay, Microsoft looking for a follow through. AMD, high of the day, 105.55. Looking very strong. Thank you, AMD.
Exchange. The note Wall Street is buzzing about. Citigroup saying it's time to buy the dip in tech and sell energy. The strategist behind the call joins us in a minute.
Fabrinet on the watch list this week. Fabrinet just continues to make new highs. Fabrinet. Continuation. Fabrinet on the watch list. Let me see, watch list. It might be 3 weeks that I've had this on the watch list. Let me just check real quick.
Absolutely. Offsets within the data.
No, I think it's just the last 2 weeks.
Market action just sort of tested the bounds of where we've been
Fabrinet.
over the course of the week.
Yeah, that one looks good.
10-year yield kind of came back 42.16 on the S&P, went right up to. So I mean, just in terms of the gains, the intraday pinball, that was a successful test. Beyond that, I do think that the market's unwilling to extrapolate this pace of job growth and feel as if this is a new regime. Good news is good news, but look what's going on in the retail stocks right now. They're getting blasted. It's not as if people are saying strong jobs. We're going to have a big.
All right, Fabrinet. Let me see the weekly.
Really disorderly selling. Probably
It's up another 7% this week.
and then other retail. So it's interesting.
Last week was
We have the economy we thought we had.
nice as well.
To sit here, if yields aren't going to blast to the moon, we don't have to root for bad economic data, and that's, I think, a net positive. And beyond that, stocks and bonds traveled a whole long way in a short period of time to essentially have this corrective move.
Is there a difference between what's happened to the retailers and, say, regional banks where the KRE's been unwilling to break below the June lows?
Yeah, I do think so. I mean, obviously, those June lows are really far down on a 1 year basis, and so you've seen a little bit of the medicine taken, and it seems like a little more of a
7% on the week. Fabrinet. Microsoft's still going.
We know that they're going to be restrained in terms of credit growth. We know they're going to be sitting on paper losses, but it's not as if we're expecting something to blow a hole in the sector at this point, right or wrong. So I do think that's a net positive. Regional bank groups trade at 80% of book value. So you want to sell them here really hard, that you're expecting something to fall.
I mean, I think it's going to be the inflation report next week. We're going to get a CPI on the 12th. Did you see the Manheim used cars?
Yeah, I did.
Actually went up. You don't want to see that. Only
Month over
1%.
month, yeah.
Month over month. And the biggest question that the Fed is going to have around today's job report is the strong job market and environment make it harder to fight inflation? Keep it that prices are elevated because people have jobs and they have paychecks, even if they're not as high.
They absolutely are going to have that debate. It probably will be the last big number before the meeting in terms of the inflation CPI. They're not going to get another jobs number before that meeting. So yeah, I think that's the debate. But you have to counter it with, as you were talking about earlier, Mary Daly saying long yields have done some of this work. Is there urgency to fit in another quarter point hike in November 1st, because we said we probably would? I mean, that's to me the big question. Although it also isn't a huge swing factor in the market, right? A quarter point on Fed funds is not going to make or break when we're up 100 basis points in tens in 2 months.
No, I think it matters how long they stay there.
For sure.
Mike, we'll talk in a bit. Thank you, Mike Santola, kicking off the hour. With this move lower today and the pullback we've seen in recent weeks, our next guest is making some positioning changes, downgrading energy, for example, to underweight, taking global tech back up to overweight, calling this an attractive entry point for the sector. Joining us at Post 9 Cities, U.S. equity strategist Scott Kroner is back. And with a great note, there's tons in there. I guess, is that the lead, would you say?
I think it's the lead. We upgraded tech and overweight in the U.S. over this past weekend. We then followed up with a global call overnight. And so, and essentially the global tech call is mostly U.S. call. But there, we got the pullback we were looking for, Carl, in terms of the move lower off in the past couple of months. What that did was reset some of the valuations. Interestingly, while the sector has gotten quite oversold, the fundamentals have been very consistently up and to the right in terms of earnings growth expectations. So we think we're in pretty good shape. And then we have sort of a debt kicker, if you will. And that very simply is that the tech sector in general, growth more broadly, carries very low debt levels versus the defensive and cyclical parts of the market, and very high cash relative to debt. So if you're looking for a way to counter some of the rising rate influence, tech is it. Last part. If you're thinking about extending duration in a portfolio, you can do it by going out the treasury curve. In equities, you can do it by going out the duration curve to via tech.
Right. Where, as you said, it's a little more reliability on earnings and cash levels. I guess that's why the Dow's best names of the year remain all tech-based.
I mean, you know, we can talk about valuation. Again, we think we got to reset. We're not giving away the valuations on tech, but we're much lower than we were. Heck, we did this note on the U.S. side. We looked at the Russell 1000 growth, and we talked about the index, but you literally have 20% of the constituents in that index that are down 20% or more. So essentially, there's a lot more carnage in this growth space under the surface. That's what we're looking at.
All right. So just scanning through stocks here. These look really good.
But do you still like overseas markets better than the U.S.?
Well, what happens if you kick the can on recession timing and you increase the chances of soft landing, then essentially you set up for a little bit of an economic rally. And when you go economic sensitive, you're at the margin going to favor sort of the rest of the world versus U.S. So that's the way we're playing it going into Q4. It doesn't negate, I think, the view that we think on tech, which is a way to think about getting defensive here, even as economic risks continue. Essentially, this growth is defensive theme we think plays out, and it's being augmented by the fact that your defensives, as you were just discussing earlier, can't get out of their own way.
Don't you need lower yields for that to work?
So we need to get at least to where we're looking at a peaking 10-year, and I think we're approaching that level, and that's where we're getting the courage of our conviction.
The underweight on UK and the underweight on energy kind of does point to what I guess you're saying is a soft global macro view in house. Yeah.
You've got a big move in oil prices. Our commodity research team at Morrison Company, they've been arguing that we're seeing a peaking in oil prices and can probably move lower from here. So we're taking advantage of that move higher in energy complex.
High took alert plus 800.
So the UK is going to be a little bit different. I mean, we know that they have their own sort of recession circumstance, their own fiscal circumstance. They're the preferences at the margin for the continent over the UK itself.
Popping in and out of these overweights quarter to quarter, are these? Would you describe these as tactical moves? Strategic.
You hope you do it with a little bit longer shelf life. The inputs change, and you have to respond to that. And so, right now it's kind of saying from a U.S. lens, we're kind of pretty comfortable shifting back to this growth focus. Again, this growth is defensive theme. When you play it globally, there aren't that many places to go for major tech exposure outside the U.S. So we're playing both sides.
I mean, the narrative gets scrambled every day, though. Today it's the strong jobs report. Leading into today, it was all about, okay, no more soft landing because rates are rising so quickly here. That's going to kill off the recovery. So the jobs report like today make you breathe.
All right. Yeah, markets look good.
It makes me rethink what degree of recession probability that we put on the outlook. And I got to be sensitive to that. We factored a lot of that into our top-down sector modeling, earnings modeling work. And we're pretty comfortable that we can navigate a growth slowdown / mild recession without a major hit to our earnings outlook. We've been earnings bullish all year long. That really hasn't changed. So this job print, if anything, it reinforces my view anyway that we get a pretty decent Q3 earnings reporting period.
Where are you on Q3 earnings?
So flat year over year, okay. But what we're suggesting is that the setup here, as much like we've seen in previous quarters, you get a decent positive surprise ratio out of that. We're not seeing too much that's kind of telling us that we should expect negative surprises. But where we're really differentiated is on a 24 outlook. We're still looking for a 245 number for the S&P, and within that, in the tech sector, we're looking for double-digit growth, 12-13% next year. So we think after a couple of years of earnings nothingness for the tech sector, we set up for a growth snapback next year. That's part of this. Keep an eye on business model maturation. It's a concept that we're talking more and more about. As these companies move through their life cycle, we've always paid a lot for their operating leverage, for expectations for operating leverage.
Okay. What can you say? Markets are just doing the work for us here. Looking good. Eli Lilly, new high. Lilly.
High tick alert plus 800. Extreme high tick alert.
One thing I'm not hearing from you are concerns about policy, dysfunction, shutdowns, deficits. Where do those fit?
Different discussion, right? So I would say a common discussion point with investors over the past couple of weeks has been A, the election, and B, how do we think about the deficit situation? And those are two issues that we're going to be contending with, I think, and it's going to be a source of volatility and some bigger issues that are going to need to be rectified. But we'll kind of leave that for a different discussion. I think that's going to be part of the election cycle narrative and becomes much more relevant in terms of identifying long-term bond yields. We need to see that peaking at some point here to take some of the pressure off.
That was today's discussion.
Yeah. So
I mean, that's what equity investors need to figure out, like the long, see this stuff.
that's part of where we're going. So, the House view is that much like it's being reflected in consensus.
Extreme high tick alert.
I get it. There's a view out there that 10-year yields don't stop at 5, and I appreciate that. My bond colleagues tend to think that bonds are, generally speaking, undervalued. So essentially, they're looking for some.
All right, so looking good.
I do think it does keep a lot of pressure on where the deep Fed fund long-term rates are, and we think we're getting pretty close to that.
You're like, let me go back and write the report first. Then we can talk about it. Scott, thanks. Good to see you.
You bet.
Scott Brown.
Still to come, Staples softness. A number of these consumer names seeing record moves, and not the good kind as rates continue to climb. Are there any worth picking up here? We're going to discuss. Stay with us on Squawk on the Street.
All right, Lily at the high. All right, Microsoft's still going here, looking pretty good. Microsoft, thank you very much. Wow. Very nice move on Microsoft. Going off the screen.
High tick alert plus 800.
Okay, so you should have a number of these stocks that are doing well for you, unless you bought the highs and prices just came back up to the high. If you made that mistake, take some profits off, or take it off at break even, flat, whatever. Maybe keep a few on just to see if it'll follow through. If they're expiring today, for example, if you have options. And we'll work on buying dips instead of at the highs. You'll do a lot better. You can see these buy signals down here at 10:10. Okay, the bottom of the screen you can see 10:10. Microsoft gave you a buy signal. Reversed. You didn't have to get long then. You just had to wait until it got above VWAP, and VWAP turned up and to the right. And then double check all the other FANG stocks. If they're all moving at the same time, you got a higher probability of success in your trade. VWAP is up and to the right. Relative volume picking up. Microsoft relative volume is at least 2 times normal, I think. Let me see. Microsoft. Okay, looks good. Hmm. 60-minute looks good on Microsoft too. All right. R-Vol's almost 2 times normal for Microsoft. Okay, we're pushing a bit higher. So this is obviously institutions that are buying. Let's just go double check. Let's go double check a few things here. Okay, I'm going to keep this on Microsoft for now. Let me take a look at SPY. SPY.
High tickler plus 800.
High ticks, volume, VWAP up into the right. Okay, Joe K talking about Frontline FRO. That's on the extended watch list. We've been watching those shippers, maritime shipping. Okay, looking for that to follow through. Okay. Also, LPG, liquid natural gas shipper. All right, that's following through today. Looks like it might get above 30. LPG. AMD leveling off at around 105.70. It tagged 106 and change, so we got the levels we were looking for. All right, we're trying for another higher low.
will investors position themselves for a rate cut cycle? In that situation, my stocks don't do very well because people will be positioned for the higher growth data points. The second thing that I think is really that nobody talks about is this AI investment cycle is really sucking a lot of capital out of my sector, right? I think there's, you can be short P&G or underweight, but you can't be underweight Nvidia, right? In this cycle, and so I do think there's some anomalies going on right now that could be pressuring these valuations more so than we would normally expect in this kind of situation. Now, I will tell you, before I became a consumer staples analyst, I covered the internet.
Okay, Joe K talking about bonds bottoming.
Thank you, Nick. It's great to talk to you.
Yep, you bet. Have a great weekend.
You too. A lot more on the market in this jobs report coming up, including a warning from Morgan Stanley about any near-term bounce in the market.
Then watching Tesla cutting prices on some of the 3s and the Ys today as deliveries did fall short of expectations and down from the previous quarter. That could apply more pressure on the big 3. Tesla shares are down, although as you can see, S&P's gone green, up 4 points. Stay with us.
High took alert plus 800.
All right.
High took alert plus 800.
shares are block higher today as TD Cowen initiates Outperform and names block one of its top picks in fintech. The firm is bullish on Cash App's runway for attractive growth and thinks Square's margins and free cash flow will improve in 24. Price target there 59, stock trading just above 43.
All right, looking good. Managing a higher low, looking for a higher high. Let's see what the 10-year looks like. 10-year yield. All right, we got a shooting star on the 10-year yield. Still too early to tell. Next week, we'll look at it again.
Speaking of Germany, factory orders rising 3.9% month over month in August versus a consensus for a 1.8% drop. It's very confusing because German exports were out recently and they were weaker than expected. And the consensus around Germany is that they're in or nearing a recession, right? And that's one of the weaker parts of Europe. But overall, the data has trended worse there lately. And the stocks have been following here, just like bond yields, higher. We forget it's a global move in yields.
That's true.
It's not just Treasury.
Yeah, absolutely true. And of course, so
And
many
yeah.
things about Germany related to China and so forth.
Sure.
Session highs, they're here though. Dow's up almost 100. All three indices green. Post to post with Bob Pisani. Hey, Bob.
High took alert plus 800.
We were down 40
Okay, Microsoft.
on that stronger than expected jobs report. Now positive by 6 points. What moves things? Well, first off, technology, which has been holding up reasonably well, continuing to do well. Here's Salesforce.
Yeah, technology. I agree with you there, Bob Pisani. If you look at XLK, looking at XLK, look at stochastic. It's holding up, pushing higher. We looked at the New York FANG index as well. MACD and stochastic's turning. RSI moving to 50. Looking really strong there. SPY,
Extreme high took alert.
4 days in a row. Is that going to be enough? MACD's turning. Look at the histogram bar on SPY. Stochastics looks like it wants to trigger. Last time it triggered was back here in the third week of August. We had a nice run up to the highs. All right, here goes Apple, Amazon going, Google. AMD looks like it wants to keep going. Oh my goodness.
Visa does the same thing. It's been acting exactly the same way. Some of the consumer names, which have been often horribly, been talking about how some of the consumer staples and healthcare names have been acting awful recently, are starting to look like they're finding a bottom here. There's Johnson & Johnson. It was 163 or so at the meeting. Went all the way down below 155 or so. 154 maybe earlier this week, and yesterday it was up, and it's up a little bit today. It's not a lot, but it's up here. So my point here is inflation is what matters.
Extreme high took alert.
Are we getting inflation continuing to come down? Average hourly wages month over month and year over year, again, below expectations. That's what we want. Yes, jobs report are strong, but strong jobs with inflation coming down, okay, a little bit of surprise on jobs, but not necessarily terrible for the economy. Guys, back to you.
All right, Bob, talking a bit. Bob Pisani. Let's get a news update this morning with our Pippa Stevens. Hey, Pippa.
Hey, Charles. Donald Trump's attorney filed a motion this morning to stop his civil fraud trial in New York. It comes after his legal team made 2 requests yesterday to dismiss separate criminal cases brought against him. Those motions argued his federal election interference case in D.C. and his New York criminal case over alleged hush money payments to Stormy Daniels should be dismissed. Russia's president suggested the country could revoke its ratification of a nuclear test ban treaty. Vladimir Putin made the comments after declaring that Moscow...
I don't care about the news, lady. Forget the news.
And the report today.
Just tell me about the markets.
Looking at the broad preponderance of evidence.
Okay, Intel doing well. It's just about to cross through 36. Intel.
Absent a recession where you get
kind of a growth scare from an economic perspective.
Okay, Bitcoin, nice move on Bitcoin. Still needs to take out 28,600. Nvidia,
Tickler plus 800.
continuation. Nvidia, continuation.
Still have this big economic moat here from the jobs environment. We're still in an expansion territory right now, our suspicion is that, you know, you get on the other side of this seasonal weakness, you get on the other side of this sentiment, and the bull market can resume. Now, when we kind of look out in advance, I think it's going to be precisely the time that everybody's cheering a soft landing. That's probably going to be the most dangerous part. We need to remember that a balanced labor market, which we're far from a balanced labor market right now, but we need to remember that's a pretty unstable condition, because when you've got one-to-one job openings to everybody seeking a job, supply shocks, that'll give you inflation. Demand shocks will give you job loss. So I do think that you could hear growing forest for the Fed has done it. We're in a soft landing at some point next year, but as things come more into balance, that's when I think the risks are going to be building.
I'm reminded of the comment Mary Daly said, I think it was this week. She was talking about declaring victory too early. Taking a look here real quick at treasuries. I just want to
Intel's still pushing higher. Finally going green on the day. Lee Automotive following through.
Another point we've been making with yields to the upside, as you can see on the top half of your screen, the NASDAQ and the broader market for the most part spared.
Caterpillar up 357 on the day. All right, speaking of Caterpillar, let's look at, let's see. This is the way we looked earlier. Market carpet. This is the way we looked earlier. Let's refresh this now. See where the green is coming in. All right, so completely different. Big change. Markets. All sectors finding some buying. That's usually institutions.
Hi, tickler plus 800.
Nice follow through. Intel going.
So the lawsuit is to be able to get Musk to come in and answer questions around the Twitter acquisition, which is now called X. And I'm not sure if there is a direct correlation, but you are correct. We are seeing prices being cut when it comes to Tesla. They are cutting the Model 3 long range rear wheel drive by around 3% when it comes to price, as well as the Model Y. So, this is something that we have seen just across the board, not only here in the United States.
Extreme high tickler.
This could be an indication of maybe some demand slowing. This could also be an indication that they're trying to get out existing inventory in order to build out new models and bring those to market. So I'm not sure if we have real clarity of that yet. We will have some.
All right, goes Microsoft breaking out another high.
Analysts would definitely ask that question when it comes to these price cuts, but we are still seeing the shares.
Microsoft still going. Nice job. Do not buy the high today. You want to be selling into this strength.
Not sure if there's a direct correlation, but it does appear to be a situation here where they are either trying to clear out inventory because of something to come in, or
All right, so this looks good. Google. My top pick for holding for the next 5-10 years, Google, followed by Meta and Apple. Microsoft, of course. Nvidia.
Football, because the brand is expanding and it's going into the Sports Illustrated theme resorts as well. Tell us about the brand a little bit.
Well, it's great to be with you today. Great to ring the bell and celebrate a milestone, which is the launch of Sports Illustrated Resorts. And what is Sports Illustrated Resorts? It's lifestyle hospitality brand where we've announced our first project next to the University of Alabama, consisting of hotels, condominiums, vacation club, and surrounding it with the experience that is Sports Illustrated. And most people in America are passionate about sports. Right. And we're going to bring that experience, both the legacy of the universities as well as your participation experientially into the resorts in college towns across America.
That is so much fun. I think college sports, during the pandemic, I think sports and gambling and
and even, trying to appreciate life a little bit more. People have changed their ways a little bit. We see consumers spending. They do want experiences, and I think they love sports. More and more, we're seeing a lot of dedication to college sports. So how, in this light, these Sports Illustrated sort of themed locations that you're going to continue to build out, you have Alabama. Where else are you looking? And are you going to have things that are sporty on the properties?
Well, let's start with the expansion plans. We definitely plan on announcing several more resorts by the end of this year.
Really?
And then, let's just say no one likes to lose to Alabama, so there's going to be some competitive juices in major college towns that we're working to, but we don't want to get out of those sports.
Okay, Google.
But needless to say, big sporting locations are where.
All right, Spy.
You bring up an interesting question on what else.
Continuation.
High tickler plus 800.
On the cover of Sports Illustrated, any other college. We want to celebrate the legacy through a Hall of Champions or a trophy room that shows all the history. But when you go to Tuscaloosa, you also want to experience events. So there will be dedicated events proprietary to Sports Illustrated with celebrities or with concert series. Sports Illustrated Fit, an elevated way for health and wellness, just to name a few. So you aren't going to be staying in a room only. You're going to be living the Sports Illustrated lifestyle.
It wasn't that long ago that you said you weren't really seeing signs of weakness pertaining to the consumer. What are you seeing now?
Nice rally. What's Carvana doing? Carvana on the move.
We'll share two parts.
All right, let's take a look at Carvana.
The longer the uncertainty, higher, longer on interest rates stays around, it creates a natural pressure. Leisure travel.
Bouncing at the 100-day. Carvana.
The question is how long will the consumer endure these ongoing higher interest rates and the macroeconomy? So, as every month passes, it's a greater concern as it relates to leisure travel, but ours has remained resilient until now. I do think as well, though, on the macro trends, we saw people really benefiting from what they didn't do during COVID, cruising in
Extreme high
Europe.
tickler.
I think as we look into 24, we're going to see domestic travel return in force.
Without a doubt. And when you look also at the different properties, you mentioned clubs, hotels.
Sorry.
And you're looking at the credit of folks that running it to make sure that
All right, nice rally. Market's going ballistic.
you don't have as many defaults and
VWAP up and to the right. Note the relative volume.
We looked at when we went through COVID is we wanted to elevate the credit quality of our consumer, and we've done that. And the FICO score of our consumer now is comparable to everyone in the public space. And it's important because you don't want to provide someone and not go on their vacation. So we've seen our delinquencies really hit the pre-COVID levels, and the credit quality of our consumer elevate, and it's important that it stays that way.
Tell me also about the inflationary environment and the labor environment. We got an unbelievable labor report today. I mean, when I saw 336,000 jobs added, which I know you saw as well, but I was so taken aback. I just didn't expect it. And revisions of the prior months, and you have travel and leisure just adding jobs exponentially. It just seems like, what problems, what issues, and yet people have 24% credit card rates.
Well, look, hospitality was really hard hit during COVID, and it's roaring back in 22 and 23.
Is it back to normal?
We're back to pre-19.
Kava, ripping higher too. Kava.
Except for our finance portfolio, everything else is above 19 levels.
Okay, so that's good.
But the element is higher interest rates, and a lot of our wages. People talk about minimum wage. We're well above it in our markets because it's competitive. So the question is that tension of higher interest rates.
Extreme high tickler.
At some point, it's going to give. I was surprised by this morning's number,
Yeah.
and I continue to be surprised. At some point, we're going to hit an inflection point where it's going to start to pull back, and it feels like it's getting really close.
And the inflationary pressures, for example, oil shot up. I mean, that was something. I mean, if you're moving goods or doing, that could affect supplies or anything else. I mean, it's all sort of trickling through, right?
I think that's absolutely right. particular case, not to say that we're dramatically different, but our consumer, instead of taking a mid-haul flight to the
All right, nice follow through.
a plane ticket, they'll get in their car and maybe drive from New York to Washington or to Southeast Beach. So our consumers will not give up their vacation. They'll just alter how they go on vacation.
So great. Where should people go? Just name some of the best spots.
Well, I still believe Southeast beaches continue to be absolutely on the hot end of every
Extreme high to alert.
Look at this market. All right. So a lot of these puts monetizing. Mikey talking about that in the trading room as well. Looking for a follow through. Ay, ay, ay.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. Other guys were charging $400 or $500. He just didn't want to do that. He's proud of the price he was charging. My dad instilled in me, always put the people first. Be proud of offering a good product at a fair price.
Nice follow through. Many stocks moving higher. So, you know, you have an opportunity to take some profits off in the strength, reposition. Take another look at your risk profile in terms of how many open positions you have. This is a great opportunity to not be greedy, but to analyze, take a look at your positions. Have you been down a lot or you're all up? You know, do you have too many positions open? Not enough? All right, this is such a great rally. Nice follow through. Nice turn. We've been waiting for this. All those puts that were congregating below 4,300. Saying a lot of those monetize. Oh, this market's just going straight up. All right, looks good. All right, the number of stocks trading above their 50-day is about to hit 20%. Big change. Wow, this is a hell of a move.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. I'm Nicole Pavlidis. It's time for the disruptors, and George Silas is with us every day, taking a look at today's disruptor, and that would be PayPal. TD Cowen, a new note on this stock. What do we need to know, George?
Well, I think, looking at PayPal, Nicole, I mean, the stock is obviously down a lot this last year alongside the non-bank financials, which have taken a hit. But maybe the stock is starting to look interesting, perhaps, from a growth and valuation standpoint.
Extreme high to alert.
Essentially is really looking at here with their call. They're initiating coverage on the stock with a market perform rating, which is basically a hold rating, if you will, with a price target around $66. You actually see, the stock or the company itself is quite compelling right now, considering, the brand itself is very popular.
All right, nice follow through. Very, very nice.
Also, if you think about Venmo, consumer-based payments, but the company's actually broadening out quite a bit. I mean, they've got a division called Braintree, which is in mobile and e-commerce payment solutions, Zettle, which is point of sale software and services, and of course, their mainstay PayPal division, which again, from the standpoint of business and consumers, really has a first mover advantage.
NVIDIA, nice rally there.
From the standpoint of having been around so long, I think if you look at the performance of the stock, obviously to the downside this year, alongside with Bitcoin, FinTech, and the other non-bank financials, as well as some of the other larger financials, it's starting to look compelling because if you consider the news that the company posted back in June, they actually sold their buy now, pay later business to KKR.
Hi,
so
took alert
private
plus
equity firm,
800.
about 1.8 billion. And at the same time, they've actually initiated a $5 billion share buyback. Now, looking at the profitability of PayPal, its net income is around
Okay,
22%.
expect some higher lows and higher highs. We could reverse up here. Where are we? 40, 427. Okay. 427.33. Running into some resistance.
For PayPal, all else equal, assuming the financial industry perhaps and even interest rates start to settle down a bit. And of course, we start to see some industry group participation back to the upside.
Right, understood. So at this point now, after hitting those low levels, going back to 2017, how would you go about an example trade?
Yeah, so this is, you have to think about this a little bit because
LPG continues breaking higher.
Quite the trend. I'm not here to say I know when bottoms are going to happen. I can't pick bottoms, but at the same time, if you look at the earnings announcement coming up
SPY.
in early November, so we can participate until then with some parameters. So what we can do very simply is based upon the stock price right now over
42, 4,300, 43.13.
And we're going to sell the $55 put. Now that has a delta that we're selling.
We're getting close to 4,300. Can we get there? Can we get to 4,300? I would anticipate rejection. If we didn't get rejected at 4,300, that would be noteworthy. So far, it looks like a lot of puts in the money, monetizing, and this rip higher. Yeah, nice, Grover.
At the same time, you have over a 7.5% flexibility to the downside before your break even is hit at 52.50. So the stock could actually continue.
Okay, so we got our first yellow bar on NYMO.
But we're at risk of losing in this trade, assuming you get assigned shares at 55 until the stock is below 52.50. Like I said, is below. That's another 7.5% to the downside. So you have to keep in mind also with that earnings coming out in early November. This trade actually will expire after earnings. So if you put on this kind of trade, you could certainly consider exiting it before earnings.
Right, understood. George Stillis, thank you so much for that. A great week of disruptors. Appreciate it. Coming up next, our healthcare sector focus, because we're looking at the Kaiser Healthcare workers strike and what we need to know about that. Coming up.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. They're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hi, took alert plus 800.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free.
All right, the 10-year, wow, 10 years dropping like a rock. Need to drop more, the dollar dropping, VIX dropping. Wow, that's really looking good. So vol sellers getting a little relief.
Extreme high took alert.
Available anytime, anywhere, on any device for free.
Welcome back to Trading 360. It's time for 360 round, and we're looking at the healthcare sector in particular. We'll start off with the big story of Kaiser's strike and how it's impacting the space. We know that a lot of workers are striking now. This has been the time where we are seeing that in many, many different sectors. Brian Tanquillet's with us, healthcare equity analyst at Jefferies, and Lee Brown, global sector lead for healthcare at ThirdBridge. Thank you both for being with us. So, Brian, about 75,000 workers have walked out. Was this expected? What is the course for this?
Extreme high tick alert.
What impact does this have?
Hey, Nicole, good morning. So, like you said, 75,000 workers have gone on strike at Kaiser. A lot of these folks are what we would call, non-nursing. Some of them are clinical staff. Think about nurse assistants, radiology technologists, and things like that. So this is clearly disruptive for Kaiser, and it is putting pressure on Kaiser and even some of the other hospitals to start thinking about wage hikes for their employees. And at the same time, we saw a strike announcement or authorization for tenant hospitals in California as well, right? So this is starting to spread a little bit in that state. And maybe to your question on why is this happening and what how do you solve this, right? I think some of this is an offshoot of the California minimum wage increase that happened recently. And so for a lot of those employees that were making roughly $20 an hour.
High tick alert plus 800.
All right, gonna make new highs. Good. All right, this is a relief rally that we've needed for a while for people who were down and out about the markets moving lower. This is why you don't sell at the low. You never know when one of these is going to show up. But there was a lot of puts building up into the last couple of weeks below 4,300. All those puts, as the markets reverse, they start taking profits because they don't want the profits to evaporate. That fuels a move higher with the dealers closing their short put positions and turning around and buying the underlying to get the delta neutral. So this looks pretty good. Looking pretty good.
Which is so essential to reaching resolution. I would also mention that this is a planned strike in just 3 days. This is Wednesday through Friday. Workers are expected to be back next week. That is the plan. That's a good signal. I would say also negotiations have continued even after the labor agreement expired, often well into the night, and progress continues to be made according to our sources. Those are all very good signs. I'd also point to the fact that in late 1990, Kaiser management did adopt a very collaborative versus anti-labor tactic, and that is why they've been so successful. What we're seeing here is, to Brian's point, a much bigger issue, which is you're seeing CPI. That spiked 9% last year. That was the highest
Extreme high tick alert.
in year-over-year inflation since 1981, and wages simply aren't keeping up. The biggest thing I'm concerned about in terms of resolution of the Kaiser.
Nice day for a Friday. So much for sticking your head in the sand and going play golf or whatever. If you miss this rally, probably kicking yourself. AMD at 106. Nice.
The THC stock here, I'm curious to hear about where you think this stock or some of the other stocks are headed. Which ones do you have buy ratings on?
Yeah, so Nicole, that's why Lee, nice to see you as well.
Apple's still going. I want Apple to keep rallying. I am short calls. I have covered calls. I'm short calls on Apple. I have shares. My cost basis is down there near 140. Oh, after about how many trades? 13 trades. Covered calls over the last 8 weeks. Plus, I bought at lower levels anyway. Looking for a follow through. Tesla looking great. I had Tesla 255 calls. I believe they were 255s. I sold them yesterday because I was afraid I'd lose all of my gains. And we gapped down, so that turned out to be okay, I guess. The SPY's still going. Jeez. Relentless.
What we're seeing now is emblematic of a longer-term concern. The average age of registered nurses right now is just over 50. We had 100,000 nurses leave during the pandemic. Another 600,000 have registered their intent to leave over the next 5 years. That's per a
Wow.
research survey. And we have roughly 25% of current
High tickler
physicians in the
plus
US
800.
age 65 and older. This is all during a time in which utilization is expected to spike. The number of folks who are in the 65 and older cohort has increased by over 70% over the last decade. Now, of course, those over 65 are the ones who consume healthcare services the most. We have spiking demand at a time we have real labor exodus concern. The real question
Extreme high tickler.
healthcare access as we deal with these demographic.
Yeah, I agree with you, Grover. Most doctors don't really do much doctoring. They push pills, for pharma.
You could think getting commission-free trades is as good as it gets.
Tesla really looking good here. Let me look at Tesla. It's kind of late in the day for Tesla. What time is it? 11:57. Yeah, this could spring up to 263, 265 maybe.
Expect more from your firm. Trade up to Schwab, the better place for traders.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360.
Wow, what a day.
Only on Schwab Network.
Welcome to
What a freaking day.
Live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago.
Extreme high tickler.
The heart of Wall Street at the New York Stock Exchange.
Up to the minute market insights.
Example trades and stock-specific analysis featuring the smartest minds in the business.
Novo Nordisk. Man, this thing is just going ballistic.
Biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network. Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on
Extreme
all
high
of your favorite
tickler.
streaming services. Schwab Network available anytime, anywhere, on any device for free. Now,
All right, very nice follow through here. Good job. Uber going straight up. Uber, nice little reversal on Uber. A lot of stocks getting bought. Most sectors were oversold, so shouldn't be surprised to see. Now look at Uber. Look at Uber on the daily. Okay, it held this this area 42. It's been pretty solid, 42 to 44. Look at stochastics and MACD. MACD turning, stochastics turning, RSI trying to push above 50. This thing is going to go next week, most likely. A lot of stocks will get bought, most likely, next week. Carvana. Wow, Carvana keeps going. Amazon looking good.
What they have similar, what they do differently, their international feel. This is how they're growing, which ones are growing more than others. We have a lot to talk about today, all about fast food chain. Remember, we're in between earnings season, so we're talking about themes. Today's theme, fast food. Before we get into that, before we bring in Jenny Horn and Joe Mazzola, let's take a look at the four major indices and see where they are at 11 o'clock Chicago time, 12 o'clock Eastern, because we have a major, incredible, spectacular comeback in stocks as we get to midday. The S&P 500 up over, just slightly over 1%, 45 points to 4304. The NASDAQ 100 up 1 3/8%, 200 points to 14,009.
Novo Nordisk keeps going.
Industrial average up just over 1%, 340 points to 33,460. And the Russell 2000 up, we'll call it 1 3/16%, 20.5 points to 1752 and a couple pennies. Now, I want to bring in my co-host for today's show. He's agreed to spend the entire hour with us, and that is the director of Trader Education at Charles Schwab, Mr. Joe Mazzola. Joe, what a spectacular Jobs Friday. This is why we love this business, Joe, because figuring out the difference between the interpretation of the data and the trading of the data, that's what is making this day spectacular. Welcome to the show, Joe.
Thank you, Kevin. I think you hit all the superlatives. I don't know if I have any additional words to add.
I'm personally out.
Yeah, no, hey, you're fired up. It's a fiery day. Something to get excited about. I mean, look, I think that, you saw the futures.
Novo Nordisk continuation.
I think at one point S&P futures were down close to 40 points. And here we go. A bit of a massive reversal here intraday. I don't know how much of it's a technical reversal. We came pretty darn close to hitting that 200-day moving average. You might have just been a scratch away or so, but I mean, we got down, bounced, and you started to see the algos really start to take over the trade and push it back up. I think that when I look at the data, there's a couple things to really consider there, Kevin. It's good. I mean, it's good that we're creating jobs. But I think that there was a little bit for everybody there, right? I mean, the bears might look at it and say, hey, this just continues to push up the probability of a move in November. I think that moved from like 81% chance of not happening last week to about a 32% chance of it happening this week. So you started to see that move. But I think the thing that maybe some of the bulls could glean from the data was the fact that wage increases weren't nearly as much as expected, and they're showing that wages are slowing down. I think the other major takeaway, Kevin, is that when you look at the revisions, really up until this report, revisions had been down for the prior months. This is the first report where we've seen an upward revision. We saw that in July and August, and I think initially the market looked at that as a pretty bearish signal. So I don't know. It's really hard to say what piece of data did the market look at to turn this around. To me, I think it's more of a technical bounce, but I guess we'll see in the next coming days.
Yeah, Oliver and I were having a discussion soon after the number came out, and we talked about the fact that big jobs number,
but the inflation. The market was reading it wrong in terms of the inflation. The inflation was relatively muted. Both were a tenth less than expected. I mean, if wages, and here's my question, Joe. You know what? Let's have a discussion with Jenny Horn first. Then we'll come back because we have a lot to talk about on this topic. But before we do, let's bring in Jenny Horn live from the Schwab Network News Desk. Jenny, a massive takeover in the oil sector today, Jenny. ExxonMobil buying Pioneer National or in advanced talks. It looks like a $60 billion all-cash deal. Jenny, this is all about the Permian Basin, isn't it?
It is exactly all about the Permian Basin, Kevin. And this is a really interesting story, and I'd say sparking some relief in the energy sector after what has been a pretty brutal week. So this $60 billion deal, or alleged $60 billion deal, I should say, right now we are still sort of in the preliminary stages, is set to be possibly unveiled as soon as just in the coming days, according to the Wall Street Journal. So it could be one of the oil group's largest purchases in over 20 years. We have seen that Pioneer, which does have a market cap of roughly $50 billion, is the largest crude producer in Texas. So if completed, it would be the largest tie-up for Exxon since the merger of Mobil back in 1999. So that goes way back, obviously. Now, what does seem to be clear is that the street likes this deal. I mean, JP Morgan said it's unclear if the price tag of around $60 billion includes the assumption of debt or represents their equity position alone, but thinks that the stars could be aligning on several fronts, making the deal plausible. That's JP Morgan's words, or analysts at JP Morgan. So they see this potentially going through. We also, of course, know that this then would give Exxon further exposure to the Permian Basin, like you said, which they have been working on for now several years, but they've yet to see, I mean, that yet necessarily come to fruition in the way that they would want. They would mean shareholders would receive around 13% premium with this deal, but more importantly than that, access to the Permian Basin, which would be then a way to shore up profits going forward. We also know that given the lift that some of these energy companies have seen in the last couple of years, Exxon is at this point.
All right, so we've got our first little pivot high here. Can we push it a bit higher? It all depends on the majority of stocks out there. Google's still pushing near 137, 138. Maybe we'll get to 138. All right, it's 12 o'clock. Looking for B and C pivots now. Looking for B and C pivots.
Plus in market cap since January. Market cap's now about 48 billion. It was 80. Second chart, Alphabet, Google. Why all of a sudden in the last 5 days, with bond yields going crazy to the upside, are Apple and Alphabet starting to catch a bid and break out here? By the way, Alphabet looks like it's going to take out a 52-week high, which is pretty rare right now. I think you'd agree. Why is that the case? There are still very important companies in the S&P 500 and the NASDAQ 100 that do not have any issues whatsoever with a higher borrowing cost. These are fortress.
There goes Google. All right, Google breaking out on Josh's comments.
They've been managing their cash very well. These are the stocks that really matter, Scott. And these stocks are just not affected by today's quote-unquote stronger than expected jobs report. Right. It just doesn't affect them negatively.
So let's bring in the Goldilocks farmer.
There goes Google. Josh Brown talking it up.
Is that right, Jimmy?
I am, Scott. Sorry I couldn't be with you in person today.
That's okay. We're glad to hear your voice because this is just what the doctor or the farmer ordered, right?
You're darn right. And I want to give credit to something Josh said yesterday. He said, look, the algos are going to take over in the morning if you get a hot jobs number, a hot top line number. And that's exactly what happened. The algos took over. But when you get more thoughtful past what the algos do, you do what exactly everybody on this show right now is saying is this is good inflation numbers. All right, 0.2%. You annualize that month over month. You annualize that to 2.4%. Hey, Steve, what if you get a little productivity on top of that? This inflation problem can go away pretty darn quickly, and the Fed looks like it's met its mandate, both of them, full employment and price control. I do want to say one more thing, which is that the bears are not idiots, okay? Their thesis has some rationality that higher interest rates should bite. But here's the thing. So is the bull thesis, my thesis, that if the consumer is employed and inflation is coming down, that's a positive elixir. Where the balance gets struck, Scott, is sentiment. CEO sentiment that keeps people hired, investor sentiment that keeps the rally going, consumer sentiment that keeps the economy going. And that sentiment will get stronger as the Fed gets more comfortable and signals that it's close to, if not at the end of its rate hikes.
Steve Leisman, Jay Powell's not going to put the jumpsuit on, and he's not going to stand near a banner that says mission accomplished at this moment. But you got to believe he's feeling rather victorious at the moment for a number of reasons. Inflation's come down a bunch. He's gotten the market to listen to him, right? The idea that they're off cuts, the market's off the cuts to the degree that it was before. He's maintaining a strong economy, and whatever they're doing and have done has gotten inflation down to a pretty substantial degree. How would you assess that?
I think he's a little more nervous than that. I'll explain why. Well, first of all, I think he's paying to be nervous. You are asking him, and actually the consensus of the economic community, to abandon this supposed relationship between job growth and inflation. I think if any Fed chair...
All right, so seeing some profit taking at highs. We're not just going to keep going straight up. People are going to take profits. People are going to take profits. All right, so we got some profit taking now.
I'm still nervous about this call. Remember the two things that Powell said. He said twice now in Jackson Hole that bringing inflation down will require GDP running softer than potential. Okay? That has not happened, so he's got to let that run. And he's also said it will require pain in the labor market. That has not happened. So before you think of Powell sort of sleeping well, I mean, sleeping well night anyway, he still has to deal with these two things, which is the idea that the labor market...
Okay, FANG stocks look pretty strong. XPEV, XPeng, trying to follow through. JP Morgan, got earnings next week with the banks. Really need to see at least decent earnings. Decent earnings. I'm talking not just about the banks, but companies in general. I need to hear positive comments. I keep expecting that the recession is going to hit if it hasn't already, and it's going to be a drag on the economy. Balance that with the idea that at the end of the year we could see a rally. We're just waiting on it to happen October through December, January. All right, looking for a higher low. Okay, stocks up and to the right for a change instead of flat VWAP. All right. So we know Novo Nordisk and Lilly doing well. Let's see how these are doing today so far. Okay, no hurry on Lilly, but more than likely going to see another 40 points.
Where once again the winners are rapidly separating themselves
losers. And when we talk about internals, and when we talk about divergences between S&P 500 versus Russell 2000, for example, it becomes increasingly clear that it's not about stocks or not stocks. It's about which stocks, and which sectors, and which cap level.
NVO, Novo Nordisk, could see 10 points.
And rates are going to start to maybe move lower, even if they don't. They're just normalizing. Maybe industrials are a good buy, as Jim has told us that they are. And more cyclical areas of the economy actually are a good buy. And your choices now have become much more variety than just in the singular place of mega cap tech because of all the reasons that you and everybody else has said. Balance sheets, earnings, this, that, and the other thing. Yeah, look, I think there's a lot
Google, looking for continuation on Google. Amazon, AMD. AMZ hanging out here at 106.50. Let's see how the options set up for next week. Once we get an update from Money Magic's levels, we'll know. On Monday, Tuesday, after all the options close today, we have an OPEX weekly, so we'll have to wait until Monday or the weekend to see how things settle down. All right. Looking good.
And if you're in stocks outside of the top two deciles of the Russell 1000, you are not having fun this year. You're probably not make sure I'm out of here. I hate to say it that way, but it's true. You think it's a live go. You have to go to the box. I'm curious, buy anything today, or are you doing it? And if not, why? Is this exactly what you asked for? It is exactly what I just asked for. And you know what? The last 2 weeks I've been buying. I'm not buying today, but that doesn't.
Yeah, good point. Rick making a good point. S&P giving us a bullish engulfing candle. All right, bullish engulfing candle on the daily. The last 3 trading days, we've had wicks on these candles. Pointed that out. A little bounce this morning on that dip. They got the data wrong. Algos didn't see the part about what Scott Zell had mentioned. The big change was in part-time seasonal help. It was actually a negative number for new. All right, so nice reversal after an 8% drawdown. Can we follow through next week? I think there's a good possibility we follow through pretty furiously next week. Shorts will start to cover more. Where is Zscaler? All right, let's see somebody reposting something I posted earlier last week. Zscaler, big move on Zscaler.
Just noting, Joe, since the Apple downgrade, it's up 3 straight days. Notable as every mega cap tech stock other than Tesla is
Zscaler, big pop, big bullish candle today. Nice.
The strongest economic activity that we see over the next 6 months. And I believe that. I think the economy is going to weaken. So in that environment, mega cap's going to work. The very definition of quality. I think Chairman Powell had an inflation problem coming into 2023. I think he's got a supply problem.
Ouch.
Do its work, and that would be to the advantage of the Federal Reserve. But I think ultimately, at some point, the bond market becomes adversarial to what the Federal Reserve wants to see happen. Supply is overwhelming, and it's going to continue.
Yeah, I mean, everybody's talking about it, obviously. So maybe at some point, it just gets overblown, played out. Everybody is talking about it. It seemingly like every day. Leisman, earnings. Well, that's all I mean. You could make the center, right? They're going to get hot heavy starting next week.
You could make a case with the stronger GDP growth, which this job market may be reflective of, that earnings may be understated. I think they've already been revised up a bit. I think that if the pie is a little bigger, then the share of the corporation will be a little bigger. I do want to maybe throw a little cold water on the euphoria here, okay? Because if rates are higher, that means the Fed's not going to hike. Rates are still higher. And it's almost worse than a Fed rate hike, right? Because a Fed rate hike, the market can decide to price in or not price in places that matter for corporations. But when rates are higher, they're really high for corporations. Still that shoe to drop of higher rates. I think Josh was really smart to talk about the balance sheet, right? And the cash flow that Shannon was talking about. There are going to be companies that are going to be winners from this and companies that are going to be losers. But rates are still higher, yada, yada, yada.
All right, more profit taking. All right, so if you want to play the downside, you could take some puts up here. Let's see how far this drops. S&P. Pulling back.
As being something that is going to act and create some restraint. So you better figure out before you go in with both feet, where that restraint is coming from inside.
We also think, lastly, before we go, that Mary Daly's view is now more pervasive, and now she's not a voting member.
Next year, though.
Right next year.
All right, we're going to fade. We're going to fade a bit more, it looks like. All right, so I'm going to take a couple minute break. Expect a fade. Okay, I'll be right back. Give me 5 minutes.
I don't think that there is much disagreement from the Fed on the front end. If you look at the forecast for this year, a quarter point separates the Hawks and the Doves. Where there is disagreement is next year. And there you go from a 4.25 funds rate to a 6. So there is quite a range there. And there are people like Michelle Bowman who want to hike twice more and maybe even more than that beyond that. I don't know if she's the sixth person out there, but there are people who are out there who have that viewpoint. And what's going to tell the truth here is what's going to happen with the data. You guys were right to point to the Thursday CPI report and then again to the inflation report coming and watch all this stuff. If we can maintain, I don't care what the job growth level is, if we can maintain this happening with this kind of wage growth and either maintain or give up even a bit on margin, I think that's a good scenario.
All right, good stuff. Thanks for being here. Appreciate it. Steve Leisman on set with us, Post 9. Coming up, more on the energy pullback. That sector now pacing for its worst week since March. Plus, there's a big merger brewing in the space. You probably heard the headlines about it. We'll get the committee's take next. We're back on the half in 2 minutes.
Good.
All right, we're back. We're still green across the board. Oil, though, down about 9% this week, on pace for the worst week since March. So, Joe, you say this is a yellow light for you. You've been overweight energy since April of 22. What does that mean? It's a yellow light for you.
So energy equities were maintained since April of 2022, overweight positioning. The refiners over the last 5 days have gotten absolutely punished. I'm not going to sit here and explain to you the supply to demand imbalance. You know that. Everyone knows that. We know the fundamentals of energy are strong. The yellow light comes from the momentum breakdown. And you've seen the momentum breakdown. We're now below the 200-day moving average in the XLE for the first time in the last 3 months. It's real what has unfolded in terms of somewhat neutralizing the extreme long positioning both to the commodity and energy equities itself. And all I can tell you is as we move into the quarterly rebalance at the end of the month, while we've continued to increase exposure since April of 2022, I'm telling you now you have a yellow light. It's not as green as it has been. It's not as easy as it's been for the last 18 months. Last point on that. Generally, when you see inflection points in a specific sector that generally tracks a commodity, it's when the underperformance appears. And you've had the underperformance in equities relative to the spot price of crude oil in the last 6 months. So all I'm just saying is I'm raising the awareness. We're kind of in a neutral state where it can go either way.
Exxon PXD. You used to own PXD. You like the talk of this possible deal?
It plays exactly into the fundamentals. It puts ExxonMobil into a position where, quite candidly, their daily production of oil rivals some small OPEC numbers. In the Permian Basin, that's obviously where everyone wants to be. Pioneer is an incredibly attractive asset, a phenomenal management team. Scott Sheffield is retiring, but he's done since 1970 a remarkable job. He is really the one who's created all this production in the Permian Basin itself. So, of course, this is a fantastic deal. If it actually happens, it's incredibly beneficial to Exxon. It speaks towards the strong fundamentals of the environment overall.
Josh, do you get rid of the IEO here, or you stay with it?
No, this is a head fake. It actually makes no sense. Crude oil peaked on September 27th at $93 a barrel. Oil is down 12% since then. The XLE is down about 8%. IEO is down 7%. For a little bit of perspective, IEO actually has been holding up better than the majors. Exxon is off 12% in that same period of time. Now, only 9% of the names, let's look at the big ones. In the XLE, only 9% of the components of that index are above the 50-day moving average, which means almost every stock has broken down on a short-term basis. That reading was above 40% as recently as mid-June, and that's when WTI crude was trading in a range between like 67 and 72. So crude is not, since those levels, crude has really just round-tripped. It is not lower than those levels, but the percentage of stocks that are working has literally had a nosedive. That's when you want to say to yourself, okay, this is overdone. These are still some of the cheapest companies in the market. Let's look at the IEO very quickly. The components themselves, on a weighted average PB ratio, single-digit price-earnings ratio. You got a 3% distribution yield for this ETF. That's the sum total of all of the dividends being paid. You got a lot of diversification here, but these stocks are going to work so long as there's no major breakdown in the price of crude, which maybe there could be. I don't see any reason why there would be. So I like these stocks. I think they're cheap. I think they're going to make a lot of money in 2024. And I think into year end, this is going to be one of the sectors, one of the stronger sectors over the summer that will benefit you if you stick with it.
You disagree with that? You must, based on what you just said. No. You think the momentum's done?
I never said those words. I didn't say the momentum is done. I said the momentum that has been in place since April of 2022 has been neutralized. We're in a position right now where we could go either way. Could crude break down further? Yes, it could. If we begin to build in more economic weakness and the potential of a recession is present, then crude is actually going to go lower. But we can go in either direction right now.
well, I mean, we could do this, we could do that.
It's not a light switch. It's not on or off. That's how markets work.
So it might come out.
You're off. You're off.
Well, what do you mean? You're the
You're
one
wrong.
saying
That's not how markets work. Markets don't always go gold to bear. It's not a light switch. It goes gold, it goes to neutral, it goes to bear. There's a resting place in between where you do the fundamental analysis and try and see if momentum resets.
Joe T telling Wapner he's wrong.
To Joe's point, we're not talking about momentum like in a emotional way. Obviously, the stocks have come down. Joe is exactly right. RSI, let's use the IEO just because it's up in front of me. RSI, which is relative strength, that's how you measure momentum in numbers, is at 41. There is no momentum here. It's gone. Joe is absolutely right. I'm not making a point telling his point. I'm saying something different.
I understand. My point is that Joe manages an ETF, okay, based in large part on momentum, okay? If he deems the momentum to have broken down, right, he's going to have to make a decision on Halloween as to whether when he rebalances that ETF, whether he takes those energy stocks in the ETF and kicks into the curve. Now, it's a dicey decision because it can go either. Hold on, let me finish. It's a dicey decision because, as Joe clarified to me, that means that he could still go either way. You're suggesting that 2024 energy can be good. He might not have the luxury of waiting that long because if momentum is broken down in his ETF, he's going to have to make a move.
Great explanation. Great explanation.
So I agree. I agree with that. But the thing is, it's not a dicey decision because Joe is running a rules-based portfolio. Joe is not, doing this and trying to figure out which way the wind is blowing.
No, but the last thing he wants to do is get rid of energy stocks and then see them run right after he gets rid of them. Who wants to see that?
Did that happen this year?
Right? It was a painful lesson in mega caps. When you run a rules-based strategy, the likes of which you do, it can be painful.
It can.
That's my point.
Absolutely, and I wear that. I'm transparent about it. I'm guiding the viewers towards what I'm seeing, and I'm just telling you, crude oil's in a critical place where it can go in either direction right now. I hope Josh is right about his fundamental assessment. I suspect that Josh is right. I'm just guiding the viewers. I'm telling the viewers something has happened here, which Josh is acknowledging, in the energy market that you just need to raise
and
the
you might
awareness.
not have the luxury of waiting around to find out if he's right or wrong. That's part of what I'm suggesting.
100%.
Okay.
You are right.
Pippa Stevens has the headlines for us. Hi, Pippa.
Hey, Scott. Syria is holding funerals for the people killed during Thursday's drone attack on a graduation ceremony at a military academy. The Syrian Observatory for Human Rights said more than 120 people were killed in the strike, the bloodiest attack in more than 12 years of civil war. No group has claimed responsibility. The White House announced that starting next year, customers will start getting their electric vehicle tax credits at the dealership when they buy a car. People typically receive their credits months after their purchase when tax returns are issued. The change will lower the price of new EVs by $7,500 and will take $4,000 off the price of used EVs. And the WNBA.
All right, we continue to fade from the high. A lot of that push higher had to do with monetizing puts. So we want to see more calls filling in at higher strikes, and we need to get above 4,300. 430 is a major level, 4,300. We initially got there and got rejected. All right, we're leveling off just below 4,300. Best case scenario, we stay up near this area, though I think we could fade a bit more. Made a lot of progress. Tesla trying to go again.
Bernstein initiates Disney outperform price target 103. That's a 34% upside. Look at the stock, it's at 82. Seaport says buy 93. A little more tempered price target. Nonetheless, Josh Brown, you've been critical of Disney. I know you don't own the stock, but are you starting to think it may be bottom, or it's in the process of bottoming?
I don't look. This stock has lost a ton of market cap. I just don't think it's over yet. I think ultimately it's hard for me to say that this stock has bottomed until we get some actual answers to these big strategic decisions that Bob Iger has to make. The good news is I think he's the right person to make them. The better news is none of this is new and all of that negativity is in the stock. But I worry, technically, there's really, look, you get two upgrades like that on a day like today, and the best this stock could do is $1.50. It just tells you that it's just a heavy, heavy stock. I did think it would get into the 70s. It hit 79 and change. It kissed that level for like 5 minutes. If you were online for popcorn, you missed it. I think I'm going to get a better shot at it. I do want to buy it, and I know the difference between 75 and 82 is not that big of a difference. So from a long-term investing perspective, so what? But I just think it's gonna get that washout moment at some point. RSI got as low as I think about 40 the other day. I want to see it truly oversold before I can say, all right, I don't care if it goes lower. I think it's the sellers are exhausted. I just don't think we've gotten there yet.
Joe?
So I feel like we could have written this note in 2019. It was not much different in the note today than what I heard back then. Understand if you're buying this stock based on value. You're not buying this stock based on growth. I'm buying Netflix based on growth. 3 years ago, I was buying Disney based on growth. This is not about growth anymore with Disney. This is about value. And understand if you're focused on value, number one, they're not really returning very much to you in the capital allocation strategy. And beyond that, it's richly valued. So I kind of agree with Josh where I don't think that Disney's past the worst. And I still think time is the biggest enemy if you're going to buy the stock.
You want to take on Lilly, which is part of our call too. Price target to 700 at B of A. They reiterate buy. So you used to own this in the JOT. You sold it when you rebalanced, and the stock's up 50 some odd percent year to date. Just goes to what we were talking about before. Just because you have rules doesn't mean the rules allow you to be right all the time or be easy.
100%. Obviously regrettable that at the end of July we stepped away from Lilly, where we had been for quite some time. So this cuts both ways. There, you can look at the financial sector, which we reduced our holdings a while back. That worked out well for us. But there are going to be trades, and that's the reality of what we do in this business, where you have regret. Now, looking forward for this company, you're going to see the potential for their obesity drug to get approval in Q4. That obviously is going to be a significant catalyst for the stock. A little bit richly valued, okay? It trades somewhat.
Just an FYI, if we manage to get above 4,300, 430 SPY, and stay up there, the possibility of a move towards 4,400 increases dramatically.
Looking at the potential for these obesity drugs to have much wider implications, and they're selling off of everything diabetes related. So I think what we're finding is that it's not that investors aren't active in the healthcare sector, it's that they're picking and choosing different spots rather than taking it as one that's going to benefit from demographic tailwinds.
Okay. Mike Santoli is going to join us next with his midday word. Check the market real quick. Dow still good for 237. There's the big board here. Yields, 10-year note, 477. So it's come off from the highs of the day, and that's enabled the stock market to get a little bit of a boost. We'll get Mike's take next. $85.55. Market commentator Mike Santoli here at Post 9. The day is still young. Anything can happen. But yep, what is this?
Back to 4,300.
Price action do to you?
Kind of unclenching a little bit. I do think the morning was really interesting in how it kind of stayed within the bounds of the trading ranges for stocks and bonds we had been in all week. So I think it kind of wanted to test to see if we're going to break those levels to the downside, the S&P, or the upside in the 10-year. It didn't happen. And then I think there was this constant sort of processing rethink of the jobs number. And it seems to kind of bottom line at, we have the economy we thought we had, which is disinflation plus some economic resilience. Probably not a 300,000 job pace, but that's okay. All that together is, okay, the oversold conditions that we've been talking about for days can sort of have a little bit of an effect for a relief rally. I talked to you, yesterday around the close and said, if you were bearish
and you've been correct for a couple of months, you have to wonder, we haven't broken the 4,200 level. It really didn't get disorderly on the downside. Does it have to at some point? Maybe, but I think it's sort of enough for now. Look ahead to where we can talk about companies as opposed to every tick in yields.
It looked like we were headed below 4,200.
For sure.
Here we are on the doorstep of 4,300 again.
Yeah.
In that kind of market.
And we're in that zone of you definitely could spin it either way, meaning until you get above 44-ish, where there was this big gap down in like September 21st, I think it was, you're going to have people say this is just nothing but a temporary relief rally, or you can certainly say we got a little bit too close to the 200-day and below that to not give it a stab.
Yeah, every sector green except for Staples, so we'll keep our eye on all that. I'll see you in a little bit. On Closing Bell, when Mike's back with me. Coming up, cyber stocks are rallying today. We have some ownership there, of course, on the desk. So we'll find out how the committee is playing it next.
NVIDIA is still going.
We're back. We're watching cyber stocks today. There they go. All in the green. Joe, this probably is in response to Clorox, at least in some regard. The cyber attack that it faced has these stocks front and center yet again. Year to date, Palo Alto 75%, CrowdStrike 65%, Fortinet 22%. You own Palo Alto, you own CrowdStrike, you own Fortinet. So you're all across the space here.
Fortinet is in the Joe T ETF. Fortinet is the one that's underperforming relative to the other two. I said just Palo Alto and CrowdStrike. I wasn't getting out of these names. I try not to look at them on the screen, but on a day like today, you see the significant outside move that they're both having, and obviously you get somewhat confused about that. I think when you think about the entirety of cybersecurity, understand even in an economy that's declining, they're very similar to the mega caps from the standpoint of, yes, they have resiliency, but also technology spending is going to continue on cybersecurity. It's almost as if it's a necessity. It's not something similar to software where when you look at technology budgets, you you price in where you're going to go. You have to go to cybersecurity, and that's the reason I own these names, and I plan on holding these names for a significant amount of time. Last point on that real quick is just understand, these names are volatile. Size the position accordingly so that you can endure the volatility.
Josh, it was CrowdStrike was your final trade yesterday, as a matter of fact.
Yeah, well, this is something that I learned a long time ago, and it always stuck with me. In times of market volatility, pay attention to the stocks that aren't going down, and CrowdStrike fits into that category. I mentioned Google earlier in the show. These stocks were under accumulation regardless of long rates, and I think that speaks volumes.
All right, we'll take a quick break. We'll do final trades next.
All right, so we really need to hold above 4,300, preferably close above it. I would say 43.25, 43.30 maybe. I don't know if we're going to get that. What's Fantier looking at? He's looking at futures, though. All right, Bang stocks are hanging out at the high. It's the time of day, BNC pivots. We start to see, it's a Friday too, so people are taking profits off the table. More than likely most people have probably quit already. Probably quit for the day. All right, let's get above 4,300. If we rally this, it'd be a really great end of day rally. All right, so anticipating BNC pivots at the moment. All right, we got A in. That was right around noon. We got A pivots in. Now we're looking for B and C. So it's very possible that we could drift a bit lower, then put in a higher low. C and D, if you don't know what I'm talking about, if you're a new member, we're looking for ABCD patterns during the day. Okay, you can see very clearly that SPY and the S&P have made a pivot high up there right near 12. And now we're looking for B and C. You might say, well, maybe that's B and C right there. Could be. I'm thinking we're going to move a bit lower. This is a 1 minute chart though. So let's go to the 5 minute. So we don't have as much noise. Okay, let's go check something else too while I'm thinking about it. Well, it just crossed my mind. Let's check Renko. Renko charts dispense with time. They just focus on price action. Okay, so I'm looking for Renko building blocks for a reversal. So we need to continue to see this. This is 60 minute. MACD's turning, stochastic's turning, RSI's turning. Let's look at the daily. Daily is still on a sell. All right, so if we move above 430 and close up there, we should get a reversal bar on Renko, and then we'll look for that to build.
Well, there he is. Tom Lee is going to join us today on Closing Bell. Probably feeling pretty emboldened after today's jobs report, market action. We'll find out now what he thinks about where we're going from here. Bryn Talkington with me, Sebastian Page at T Rowe, and then the Dean of Valuation, Aswath Motor of NYU. Find out what he thinks valuations are now relative to this big move in rates we've seen. Expectations for earnings and everything else as we look ahead to an important week ahead for your money. So I'll see you at Closing Bell a couple hours time. Josh Brown, final trade.
Pepsi, this is ridiculous. We're not all going to be skinny. You can take my word for it.
Yeah, the staple stocks have gotten hammered, man. Pepsi, Coca-Cola.
Come on, look at this chart. Come on. Come on.
Do we have time to pull up a chart? Let's pull up a chart.
Just pull up Josh's Instagram feed.
PepsiCo.
Can we do it?
Stop it. Stop already.
All right, we'll get,
Wow.
we'll get Joe's.
Looks like a hammer on PepsiCo. Not a bad area. Let's look at the weekly. Ooh, PepsiCo coming down into some support levels for 150 or so. Needs to see a base. You need to see a base.
We have the chart. You want to tell us why Pepsi and not Coca-Cola?
I don't know. It probably wouldn't matter. This just looks obscenely overdone. Given the
Coca-Cola looks good too.
Yeah, well, it's been today's Staples, the only red sector. We'll see how that progresses. Dow's good for 232. Green across the board does it for us. I'll see you on the Closing Bell. Exchanges now.
Thank you very much, Scott, and welcome to the Exchange. I'm Kelly Evans. Ahead this hour, stocks are staging a big reversal since this morning's jobs report. All three major averages now positive, with the NASDAQ the outperformer up 1 point.
Okay. I don't want to listen to politics. That's all. This program, this particular hour, that's all they talk about is politics.
It's good to be cash rich, and Exxon clearly fits the bill there. You know, this deal alone would make Exxon produce about 1.2 million.
Are they talking about Exxon and Phillips 66? Oh no, Pioneer.
That needs to be asked, and I don't know if you've seen any analysts put any probabilities on this, but I mean, what's the likelihood that regulators let something like this pass?
Yeah, that's a great question. And to speak to that, Pioneer is the Permian's largest operator with 9% of their gross production. Exxon's number 5 at 6%. So combining these make about 15% of operated Permian production, only 6% of U.S. production. But still, these data points are relevant given the fact that we could be seeing some FTC scrutiny with this deal. I mean, this can make a basin, which is obviously what Exxon hopes for. But we also know that oil companies have been, I mean, there's sort of these mixed pictures because they have been reining back some of their spending. So then it could be seen that right now, I mean, shares have fallen, the valuation looks a lot different than it did about a year ago. But one analyst I was actually reading was saying that this could set the stage stage for more large-scale M&As within the sector. Actually, Bill Smead, who is the chief investment officer at Smead Capital Management, said this is the beginning of...
Yeah, we're holding up very well. SPY's holding up very well, S&P. Let's take a look at IWM because we had some concerns about IWM basing a bit longer. A nice bullish engulfing candle on IWM. That could be the start. Volume looks good. I don't know. If you were going to trade IWM, I'd probably do options. I'd probably do the options rather than shares. And I'd go close to the money, maybe the 174s, 175s, give myself at least a week or two. No hurry. We could come in on Monday and be basing down here again. So I'm more interested in the FANG stocks, the top 10 that are on the New York FANG index. Those are performing very well. If they continue to perform, I'm more interested in day trading and swinging some of these names like Google. Okay, look at this. Look at this candle. Beautiful. 50 days overhead. If we get above the 50-day and then this trend line, 50 days is going to turn back up. 200 days still trending. And we got 10 stocks in this list. Okay. 10 stocks.
Looking forward to a more of a breakdown with George Tillis on ConAgra. Looking forward to auto parts right after we talk some Tesla. Then up, down, but we got kind of like two twin themes here where analysts are not just weighing in on one particular company, but rather they're weighing in on sectors. We're going to look at a couple different viewpoints.
Okay, so here's the New York FANG list. There's only 10 stocks. All right, these 10 stocks, they're approximately 10% each. Amazon's 9%, Apple's 10.5%, Meta, Alphabet. So if one is moving, that's one thing. But if all 10 of these stocks are moving higher at the same time, that's what I'm looking for. So I'll pick out which one during the day looks the best usually and look for buy signals, and maybe we'll day trade that. Google is probably one of my longer term ideas. I have June calls for next year. June calls. I believe I have the 120s. Let me just check real quick. Yeah, I have the June. I'm sorry, I have the June 140. Sorry. I had something 120. What was the other stock I had? 120. There's another stock I have close to money at 120. What was that? Where did you go? Okay, Novo Nordisk looking good. Okay, BC pivots probably this time of day. Novo Nordisk.
The analysts covering Netflix this name does skew 59% have buy or buy equal rating.
Nice looking chart for today, but the chart on this name on a longer time frame, maybe not so positive relative to what this shape looks like, because I'm looking at a name that of course has had a wonderful second half of 2022 into 2023. But investors,
all right, so those 10 stocks, Snowflake, one that John was looking at, John Smith looking at Snowflake. Let's take a look at some of these. All right, so let's go here. New York FANG, you know what it looks like. Look at the RSI, finally piercing 50. Okay, MACD cross, stochastics rising.
Both these shops weighed in on Disney as well. What were they saying about one of the key peers, I would say, to Netflix in this streaming world?
So what is interesting is this Bernstein analyst is less.
Okay, New York FANG looks good. All right, I'm gonna go back to the S&P. Keep an eye on it. We want S&P to stay above 4,300. Get above 4,300.
Challenger at this point to a name like Netflix. That's one reason they actually recommend buying the stock outright. The analysts did say, well, they have a bearish view on the company's linear media business. They're optimistic about Disney's potential in streaming, especially if the company looks to buy the remaining portion of Hulu that it doesn't already own. That is still owned by Comcast, mind you. They do see an ample synergy potential for Disney if the company were to fully own Hulu alongside its Disney Plus and ESPN offerings. Additionally, this analyst is upbeat about its international opportunities specifically for Hulu, with some back of the envelope math on the conservative end, since Hulu, they said, has a similar level of foreign content as, say, a Warner Brothers Discovery. The incremental revenue could be around $2 billion. But did note there's a ceiling that could be around $9 billion, depending on these bundling strategies as well as investor overall content here. So Disney, amazingly enough, because all we talk about is the fact that Disney's got to figure it out this year, 71% of the 31 analysts do rate it at a buy, or again, buy equal rating, and the average price target does imply about 28.5% upside. And Disney, quietly, all I was talking about was how we're seeing the losses sort of outpace the gains on the week. Disney's up over 1.5% now week today, with today's nice move to the upside. So although we're still down 5% this year, they are at least attempting to close out this week in positive territory.
I had to like blink twice and look at this because this is the daily chart of this name, and it's like almost exactly the inverse of what this stock looks like on a year-to-date basis. But really nice day.
Excuse me.
As the day is rolling on, so a positive thus far. Final day of the trading week for Disney. So much of this conversation goes to what Disney themselves has said they're going to spend their money on: theme parks and experiences in person, away from screens. So we'll see if that pays off as we roll in to 2024. All right, time to shift gears. No clean transition here, but comparably, we had TD Cowen weigh in on the fintech world, particularly the payment services companies, Jenny, in PayPal and in Block, formerly known as Square. Let's start with PayPal.
So PayPal, okay, so the story gets a lot more negative from here regarding both of these names, because TD Cowen did start coverage with market perform rating at a $66 price target, saying that PayPal, while it is a leading fintech name with unmatched global network, along with these leading consumer merchant products, they do not see ample uncertainty given its assertion that staying on top is just as hard as getting there, saying there are many potential catalysts, but those do rely on these show me story dynamics that are limited to some of the upside in the near terms. They do not actually really believe in the narrative that PayPal has attempted to lay out to re-spark some enthusiasm. Now, PayPal is down 20% this year, down 2% this week, and I do think it's important to zoom out. I know this isn't exactly fair because the argument is that valuations have been reset since the pandemic peaks, but they're down 80% from their all-time high, which was $310 a share. So amazing to me that we do.
All right, what does Broadcom look like? AVGO. Nice. Broadcom trying to turn. NVIDIA.
You gotta think about this stock in a lot of different ways. You can zoom out all you want, but the story just doesn't get that much better until you go a long, long ways away. I was just even looking, we got 3 years behind us. Even if you go 5 years, you're on your lows for those time frames, and that's disappointing for a stock that really was just a darling of the market for much of that pandemic period. It really did seem like it was positioned to disrupt the financial world, and maybe it still is. But at $57, I think there's other concerns at PayPal right now relative to where do we go from here with this stock to seemingly make new low after new low. Price target at 66 though. I think 66 would be more welcome today than it was maybe a couple months ago. But investors got to take what they can get if that even happens. Last one though, Block is another name, the same firm weighed in on here, initiating coverage. What do they have to say? Because for a while these two companies were nowhere near each other in the same stock price. They're getting pretty close now.
They are, but I will say that Block is the worst performer of these scored by a sizable margin. It's down 31% this year. It's also down about 2% this week, and off its all-time highs by 84%. But amazingly enough, this same TD Cowen analyst does actually see a better story for here for Block. Actually started coverage with an outperform rating, a $59 price target, noting that Block boasts a fundamentally differentiated ecosystem in fintech, given Cash App as well as Square. They see the company's ability to grow and integrate solutions, placing it among the most likely to challenge the industry norms. They also added that recent pressure on shares has been overdone, and some of these negative revisions have already played out from here. And this name, second to Disney, has the highest buy rating ratio. 68% of analysts do still have a buy rating. And the average price target is $78, which implies over 20% here. So this is another name where the street prices are.
All right, so looking really, really special, nice special day on the reversal. It almost feels like everyone was looking for the same thing. And once the trigger appeared, everyone started buying, short started covering. Now we just need to close above 4,300. If we can manage that, then that would be just about everything I'm looking for. I'd also like to see calls build at higher strikes, a little bit higher and a little further out in time. Okay, let's push this above 4,300. Above 4,300. That's what I'm looking for.
You know that tech stock we talked about? I picked up 500 shares. You get in at a good price? Oh, yeah.
There goes Amazon coming out of a squeeze.
Schwab Order Execution Advantage. You get price improvement on 96% of orders and commission-free online trades. Are you getting complete price transparency? Expect more from your
Google,
Schwab, the better place for trade.
Tesla. Shit, look at these stocks go. Go, baby, go, go. Make Papa happy. Oh, man. All right. Here we go. Here we go. VIX dropping. VIX dropping. All right, so 10-year pushing back up. All right, wife's been picking up the boy. So there goes Apple coming out of a squeeze. Apple. All right, we're above 4,300. Let's keep going. Keep going. Crude 82.58. That's the 200-day. VIX dropping off. Google coming out of a squeeze. All right, this is beautiful. Beautiful, beautiful. All right.
Counterpoint. I was the one who's getting boosted off on my Netflix account, so I say all you freeloaders can take a hike personally, but
I'm sure my dad is saying the same thing.
just kidding. But I thought this was a pretty interesting chart for a couple of reasons here.
first, it's exhibiting in the broader picture this kind of lopsided triangle shape. Look at the blue trend line going across the lows and this white trend line starting with the highs. This is a shape we've seen in tech names a lot lately. To me, it suggests.
All right, here we go. Let's break this sucker to the upside and just make no doubt.
And then it's counterbalanced.
Leave no doubt. There goes Novo. Novo going.
This one with Netflix is we did break below that lower trend line here.
Okay, let's look at Novo. Novo Nordisk is going again. Okay, higher lows, higher highs. Eli Lilly. Lilly.
Simple moving average in green. This green dashed line, they're lining up right around the same area near 371, just above that mark here. So the more indicators you have coming together at the same point, the greater weight that price level has. And, just a quick reminder, simple moving averages, they're unweighted. Every price is treated the same. You would take the 200 closing prices for the past, 200 days, add them together, divide by 200. That gives you your moving average number. For an exponential moving average, it's more weighted toward the recent price action, so it reacts faster. It's kind of unusual to see them both lining up like this so cleanly here, but nevertheless, it happened. And it looks like price is holding on. If you take a closer look here as well, you can see that we've got a bullish engulfing candle forming here. That means the real body, the distance between today's open and today's close, completely encompasses the difference between yesterday's open to close. So the real body is completely engulfing the previous day's real body. That's a bullish sign, but you want to wait for the close, make sure it plays out the way we're expecting, and look for the follow through the next day as well. That's another key part of this. Overall, though,
Microsoft, yeah.
Looking like the trend is more downward. We're within a downward channel here. Our two shorter-term moving averages are trending down. We are holding its support. We've got a bullish engulfing candle. So kind of some tension here, though. So short-term, looking like it could be more bullish against a more prevailing downtrend.
Okay, so this bullish engulfing candle, what does this mean as far as momentum and
Beautiful, beautiful.
direction of this price?
Beautiful.
A little bit and talk about the MACD today, the moving average convergence divergence study here. Slightly different than the RSI, looks at moving averages to assess momentum rather than the RSI, which looks at the differences between the highs and the lows of closing prices here. But you can see here, we are, according to our histogram of the MACD, this bar graph here that shows the distance between our two specially constructed lines, the trend has been improving here. We're very close to a bullish crossover.
Yep. Yep.
Crossing above the slower line here. And you can see that would be another bullish signal. So we've got our
Novo Nordisk about to break out again.
on the verge of this crossover here. But as
Looking very strong.
crossover to actually happen. Wait for it to close, wait for it to fully complete. You don't want to jump the gun on these trading signals. They can reverse many times here. And we've still got a few hours left in the trading day. So that could be a bad situation to put yourself in that it was completely avoidable. So wait for the close, wait for that to fully develop here. But it looks like momentum is improving for the bulls in this name.
So all in all now, what key levels are you keeping on your radar here? And actually, Netflix does have earnings just in a few weeks. We have that near-term catalyst to look out for.
Sure, good question here. So in the shorter term, at least, the point I mentioned, the confluence of our two moving averages, our purple 252-day EMA, our green 200-day SMA coming near 371, that's the mark to hold heading into the close. Very important to hold that number. If we don't hold it, look around here. This lower line of our channel matches up with this volume node, according to our volume node study, right around the 360 level. So this is an area of heavy trading where we have some support. That seems like a likely candidate to start looking for some supportive price action. To the upside, we've got another little confluence here. We've got our yellow 21-day exponential moving average in concert with our old blue trend line here. Old resistance becomes new support and vice versa. So this one, we'd be looking for it to be resistance. That comes in right around 391 or so. So that's a level to watch to the upside.
Yeah, absolutely. And as far as, the street echoes some of this bullish momentum here because we have seen really strong price targets today out of both Bernstein as well as Seaport. So With this in mind now, Alex, walk us through what you're thinking. We're optimistic on this Friday, even though it's kind of dreary out in Chicago, but walk us through and what bullish an example trade now.
So we're kind of in no man's land, a bit of limbo when it comes to when the earnings event is versus where we are right now. And so it can be a little bit less desirable for some traders who are worried about those events. You're sort of left with super short-term trades. We're kind of forced to go into a time frame that's going to capture that event. You'll have to sort of deal with that as well. So what I elected to do for this illustration, because Netflix does carry a little bit bigger stock price, does have some volatility, leading to some option premiums still being in some of these shorter term options. I just went out till next Friday looking at buying a call vertical. This is a bullish strategy, typically structured in the way that we talk about it, by buying an option that's slightly in the money and selling one that's slightly out of the money, creating an equal risk to reward, and then also creating a break-even point that is near the current share price. This seeks to do all of those things at the same time. Buying the 377.5, selling the 382.5 expiration. You'd be risking 250 to make 250 with a break-even at 380. Well, right now Netflix trading just over 380. So
Yeah, I don't know if you recall, but yesterday I was talking to a member that was thinking about selling everything. And now, while I did, obviously, we don't know that we're going to get this kind of a rally today. Imagine he's feeling a lot better today. He was thinking about selling everything yesterday. He was down pretty big. I was like, wow. I can't advise you. I can only tell you what I'd do. I sure as shit wouldn't be selling yesterday. I'd be trying to find ways to remediate the situation, sell some premium, maybe take a little bit off, whatever, but not sell everything at a huge loss. Big reversal today, above 4,300. We're looking for a move back towards the July pivot highs. Now we got a lot of resistance levels overhead. One day does not make everything better. We could still go down and test the 200-day, but this reversal on a bullish engulfing candle certainly looks a lot better. And stocks in general look better. Okay, you recall, if you've been here in the last couple of days, you recall that we've been looking at the number of stocks trading below or above, depending on how you want to look at it. There's a number of stocks trading below their 50-day. It was down to 92% early in the week. Now we're back to almost 80%. 80% are above or below. So we're about 20% of stocks above, and we're starting to return in the opposite direction now. Key to money flow. Where is the money flowing?
Since then, we've been trending down. So that's an obvious line in the sand to watch as well here. But overall trend picture, bearish now, but maybe improving, maybe a little bit of the early signs of a turnaround.
I think that's what shareholders would hope for, because it has been a pretty painful couple of weeks and months for Disney shares. But now, again, looking at MACD, we're changing things up on this Friday. Rick, walk us through what you're seeing.
Well, we were talking about a potential crossover on our last one. This one, we're actually getting the crossover today. We're crossing over our faster line is crossing above our slower line here. But look at the bar graph. Look at how sluggish momentum has been for really months here. Kind of just languishing sideways, not really making a big improvement one way or the other here. And you can see what we really want would be a cross above this zero line, this purple line here. That would suggest that momentum is really starting to pick up. So the crossover of the two lines, that's a sign of improvement. But there's kind of another step that needs to happen still. That's what bulls would probably really
Look at that candle too.
With a break in price above resistance.
So we're sort of stuck in this limbo, not able to say it's really a bullish trend yet, which I think is fair. I mean, that chart clearly illustrates that. But now, as far as support and resistance, what are you watching? Disney, I will say, does not have earnings until the first week of November 8th. So we do have a little bit more time ahead of that earnings event.
Let's say we do keep going up here. The first area to watch, right here, the 63-day EMA in orange, right on top of the upper line of our wedge type shape there, right around 84.65 or so. Beyond that, we'd want to break above those gold lows, this red dashed line here that I mentioned, right around 85.30 or so, rough area to watch there. To the downside, we want to hold that 21-day EMA today. That's an important mark to hold heading into the close. We're 81.78 right now. To the downside, we've got our old lows to contend with. 78.73, a move beyond that level would not be good for the bulls.
Yeah, I think really well put. And of course, these names have seen their fair share of selling. I think it's difficult to say that they're seeing strength, even though obviously we're ending the week on a lighter note for both Disney as well as Netflix. We'll leave it there. Great breakdown on our streaming stocks today, Rick Dupont, our chart master. So now, Alex, when trading this name, different situation. I mean, they look very different on a year-to-date chart. Disney looks strong this week, not enough to really recoup those losses. So leaning into then a more neutral bullish strategy here.
Yeah, it was sort of a neutral bullish themed name when it came to some of those analyst notes, the picture being somewhat mixed on the technical front. And quite frankly, just because the stock's been trending downwards, investors may be not quite as convicted yet in this name. So looking at a neutral bullish strategy, as you mentioned, that first full week in November is where this earnings event is. But the first week of November is the one prior. That's the one that we went to, November 3rd.
All right, so we need to add to this. We need more. More.
Sometimes investors may look at the technical levels. They may look at the chart or the fundamentals of the price targets to select strikes. Sometimes it's just a function of pricing. In this case, that was more the thought process in these strike selecting. To get a 2-to-1 ratio selecting a third with the strikes, were the ones that did that. So no real technicals to point to help you with the 82.79, but 82.79 you can collect $1. That was the thought process. So risk 200 to make 100.
All right.
As long as it holds on to 82, going into that first week in November 3rd, avoids that earnings announcement. Investors would be happy if this thing was above 82. That'd be the most likely chance for you to collect that full credit, keep it, and move on. Risk all the downside. $200 if it's below 79, and these options went through assignment exercise.
And of course, risk fine, and this does not go through that earnings event, so we avoid some of that earnings premium naturally, but we will leave it there for this segment. Now, to shift gears here, coming up next, we are looking at all things Tesla for FOMO. Tesla, although lower on the day, it's recouped most of its session losses and now pacing to close out this week as another bright spot in these markets. We'll discuss more why coming up next.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades and quality trade executions on our powerful platform. Plus the satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, any device, free. Schwab Network. Spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
All right. It's been a good day to be here with you. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Friday the 6th. Only the first week of October. And we had quite a drubbing. First week of October. Did I say day?
here. So Kevin, developing story doesn't really cut it because this has been a bit of a mixed response. Initially lower, now higher. It would make you think that if you tuned in right now to these markets, you think it was a stellar job support. So is that true?
Yeah, I mean, what is developing is this rally to the upside here that continues to gain momentum. We are seeing the S&P 500 up about 1.1% at this point in time. The NDX up over 1.5%. And you are right. This was actually a really good jobs report. It actually beat the street's expectations by almost 2 times here. The non-farm payroll actually came in at 336,000 jobs versus the street's estimate of 170,000 to be added. And we saw the unemployment rate at 3.8%. The street's estimate was 3.7%. That also does indicate that we are seeing a little bit of churn in the marketplace, which is another actually good sign for the Fed.
All right. Nice reversal. All right. So the number of stocks trading above their 50-day, just posted that in the trading room. I'd like to see this plus 20% by the end of the trading day. I'd like to see plus 20%. Okay, we're getting close to 20%. That means 80% or below. All right, there goes S&P. S&P, there goes Lilly. All right, stocks are acting very bullish. The bears had their bears have had their fun, so don't be complaining if you were bearish coming into the week, because you had your fun. Only thing I would have changed a little bit is if I had had puts coming into today, but I had no idea what the market's going to do. 4,200 was tested, the area down there a couple of times, 4 times this week, right? 4 times this week we tested that area. Okay, the equal weight index shows it pretty strongly. 4 days at support. That was the March low. Then we made a higher low. Okay, so it's looking pretty good for next week if we can manage to hold up here. Gosh, I hope we are, because, it's been a sucky week. I'm not so much concerned about myself, but we have a few members that are down and out because they were looking at selling yesterday. They were worried about their portfolios. We were only 8% down off the high. Had to talk them off the ledge. And look at the reversal candle we got today. And they're still going. There goes Amazon. There goes Google. There goes Microsoft. That's certainly a sign that institutions are buying. 134 on the East Coast, the best coast. Catherine, what's her name? Catherine Weigel. She's doing commercials now. I heard she's really hard to work with in Hollywood. No big deal. It's a problem with actresses and actors. They think they're special after they make a few good movies. All right, so we're having a good day. What the hell is he talking about? I don't even know. My mind tends to drift when we're doing very well because I have time to think about other things besides the markets. Hope everyone's having a good day. It is Friday the 6th. Only 1 week into October. Only 1 week.
There could be a little bit shakier job data going forward. We don't need much of an uptick in unemployment to be, a full half a percentage point off the lows, which is typically an indication that recession is not far away, or it has been. And also the household survey, only up 86,000 versus the 220,000 prior, does still kind of highlight a weaker jobs market. So we'll see. I think there's a lot of positives we're taking away.
If you're a big John Gresham fan, I am as well. I'm reading the judges list. I read the Whistler last week. Finished that up. Judges list, John Gresham. Pretty good book. Can't put it down.
We'll see what what the rest of the year has to bring.
Will say, so we're basically unchanged on the session, which is sort of amazing. This has been alongside the market's comeback here, now pretty much rallying on the session. But Tesla did announce further reducing some of its prices for their Model 3, their Model Y. And again, this has been the ongoing story all year long because you have the camp of people that are saying, what does this mean for margins? But Elon Musk has been very transparent. He is so focused on volume over margin growth this year, Alex. So, I mean, interesting figures. We're seeing it more affordable for the consumer. We're definitely winners in that aspect, but not necessarily seen as a winning sign for Tesla, perhaps signaling that they have some demand issues. They have to keep lowering their prices.
It's hard to say with a company like Tesla. This has largely been a part of the plan, it seems like, since the inception and Elon Musk's involvement. This idea of start with the expensive car, make a slightly less expensive car, to make a more affordable car, to make a very affordable car. It seems like they're truly trying to implement that. But I also saw another explanation that I think provides an interesting thought and also maybe deserves some merit, which is, are they attempting to sort of apply this sort of razor and blade type of process where the car itself isn't necessarily the bread and butter, but it's the updates to the software, the full service driving, potentially the battery and its applications elsewhere. This idea that the Tesla car gets you in the door, but you're monetized after. Very similar to sort of how the iPhone seems to work now. Yeah, the iPhone's still making a ton of money for Apple, but they're increasingly reliant on you accessing that app store and the services after the fact as much as they are about the device itself.
No kidding, and they definitely get me in that sense. But this does come after they did release their third quarter deliveries, coming in around 435,000. That was disappointing. Consensus.
All right, so we've got more than a couple hours to go.
Saying almost like a non-selling event.
Nice candle. RSI is rising. Finally rising again. Stochastics triggering. Looks like it could follow through next week.
Claiming he failed to appear to provide testimony last month. He was subpoenaed back in May. That is an ongoing saga, and that has so much more to do with his purchase of Twitter. I don't even really necessarily want to get into it. But what I did find when I was looking at all things SEC versus Elon Musk, he did recently respond to the social media user who shared a graphic that was comparing EV sales for the first half of this year. And he said, basically was responding to if he should be at the head of Tesla, saying, some say I should question if I should even run Tesla. My response is simply, which CEO on that list would you prefer? Responding with this graphic that showcased their leading sales performance in the first 6 months of this year. Mind you, they've outsold its 19 closest competitors, including Ford, Rivian, Volkswagen, and BMW. They did achieve an impressive 325,000 vehicle sales, which the second best just to Tesla was GM with around 35,000 electric vehicles sold, which just paints a picture of their dominance. I mean, 325,000 vehicles versus GM around 35,000, incomparable. And I think that is why we're still, I mean, not necessarily that's why, but just speaks to Tesla's dominance in this market. So often, I feel like the bears start to echo when we start to see things pull back in Tesla, but this stock is still up 110% this year, and it's up, I mean, a decent amount, 4% this week, Alex, which is amazing considering some of the weakness and mass selling we've seen in GM and Ford. Obviously, they have somewhat of their own issues going on right now, but Tesla is appearing to emerge as the winner of these UAW strikes.
When it comes to these lawsuits things, to me, this is equivalent to like the gossip tabloids that you see when you're checking out in the store. Like, to me, that's like what it is in the financial markets. When it matters, the market will let us know because there'll be price movement. When it comes to Elon Musk and other leaders of these companies, many of those other leaders of the companies are not household names. So the fact that everyone knows who Elon Musk is goes to show some of the successes that he's had, and some of that comes with failures as well, and downsides and positives.
All right, higher lows, higher highs.
But from a trading standpoint, the FOMO feeling of Tesla seemingly is always going to be.
All you need to do is look at your FANG stocks. They're all performing. And look at the tertiary stocks, secondary stocks, not just these big 10. Most everything is moving higher today. VWAP up and to the right. Relative volume is high. Check the relative volume on your stock.
this, but you know the drill. One in the money, one out of the money, equal risk and reward. That is sort of the loose guideline that we use to structure these. And at the time, that is what this was. So the stock at the time was trading closer to 257.5. That was the break even for this strategy, the 255, 260 in the October 13th cycle. If you spend 250 on this, you're going to be risking 250 to make 250. Very, very eerily similar to what we looked at in Netflix because it is essentially the same strategy.
Right, and essentially, I mean, we're seeing. I mean, I just keep waiting for Tesla now to slip into the green territory because it's trying so hard, but still just slightly lower here on the session. They also, similar to Netflix, have earnings on October 18th. So
Big day.
it is a big day. Well, we already have our delivery numbers. We will obviously be watching that event very closely, but that'll do it for our FOMO segment. Now, coming up next, we will look at some of these auto part retailers, specifically O'Reilly as well as AutoZone with Jeff Pierce. A downgrade, but shares are shaking that off. Both names higher on the session.
Didn't think it would be this easy, nor do I think it's going to be this easy to just keep moving higher. I got to believe the bears are going to come in and start selling, or at least some people start taking some profits, expecting that this is just day one. It's all about the close, though. So for the next couple hours, we've got to monitor price action. It is a Friday, so it is good to see all this buying, the FANGs, the secondaries, the thirds, tertiaries. Let's go take a look at IWM. IWM, yeah, very nice candle on IWM. I'm expecting that this is going to be a nice hedge, or a nice base, rather. All right, a little more profit taking. So IWM needs to base in this area some more. Stochastics could trigger soon. It's trying to push through 20, maybe next week. Let's see, IBB, we'd like to see this following through as well. Okay, nice reversal. 3 white soldiers on IBB. That's really good. Okay, IBB looking good. 3 white soldier reversal pattern. You know, if we had the best of everything, we would close right here and we'd be at highs, you know, just a little profit taking. Or we push a bit higher. I'd love to see it up above 43.20. 43, what was it? 43.11. Let me just double check here. 43.11, 43.30. 43. No, that's not right. Today's Friday. Okay. 43.13. All right. So close above 43.13. Give ourselves a little lagniappe there. 43.20 would be good. I'll I'll be happy with 4,300. We close above it. Even more happy if we close above 43.13. And we get these FANG stocks to close in the upper half of the daily range. Okay, so let's take a look at some of these FANG stocks and look at the candles that they produced today. All right, so here's Tesla. Tesla did pull back. All right, so there's that. Here's Google. Okay, so that's a very bullish candle. By the close, we want to see this candle stay in the upper half of the daily range. And we want RSI to keep rising and stochastics to keep following through. That would set up for Monday, Tuesday. We got a MACD cross. Most people, there's a lot of people who will take this signal right here, just the MACD cross or histogram shortening on the MACD. You can see the trend in histogram. That's the difference between these two moving averages, convergence divergence index. And stochastics rising, which is telling you more closes in the upper half of the daily range to be expected over a rolling 14-day period. This is a 14-day moving average. So stochastics, what this is measuring is the tendency to close in the upper half of the daily range. When it turns higher, that's telling you that over 14 days, using a short 3-period moving average, 3-period, the shorter term is telling you that turn is telling you look for closes in the upper half of the daily range on a rolling basis. So out of these, so at 10 candles, only 2 of them were bearish. Nice reversal right here. RSI rising. So that looks really good. So that's Google. All right, let's look at Amazon. Amazon. We want to see bullish candles like this. I'd love to see this above the 50-day. It isn't. It is what it is. But it's a bullish candle. It's an engulfing candle. Yes, it's an engulfing candle. I'd like to see the volume above yesterday's volume. MACD histogram turning. So that's telling you look for the next couple of days. It's the bulls to lose here. It looks like the bears are losing it. Losing grip. Stochastics will probably trigger today or Monday. Amazon looking really good. NVIDIA, very strong this morning. NVIDIA, back above the 50-day. NVIDIA, want to see a close in the upper half of the daily range. Same story here, RSI rising. Volume over the last 2-3 weeks shows that people were buying on the dip. I mean, between Google and NVIDIA, I don't know which one of these I like better. Probably Google, because NVIDIA is so expensive. Not that that's a reason to not like it. It's just, I can buy more shares of Google at $137. Same thing with Tesla. When Tesla was trading around 100 and everybody in the trading room got long over here, using Grover's scripts, you got a nice reversal buy pattern, buy signal on the daily back here around 101, 102. I know Grover remembers that. I know Lee Star remembers it. And a few people that took Tesla over here. I was buying Tesla shares as well. So Tesla, much easier to own 200-300 shares at 100 than it is 200-300 shares at 300, 260. Selling covered calls whenever it gets into these sideways patterns, looking for a follow through, and just adding dividends to my P&L by selling covered calls, selling premiums, selling credit spreads, whatever. All right, so that's Tesla. Let's look at Apple. Okay, Apple hanging in there. You know that I have covered calls on Apple. I just rolled up this morning or yesterday to 180. Rolled up, was it yesterday or this morning? I think it was yesterday, wasn't it? Thought it was yesterday. Apple, where am I? Did I do it yesterday? I got to keep better records. I write it down in my journal, but need to be more organized. Maybe with AI will be a lot more organized for me. Let's see, Apple. Probably wrote it in, put it in the trading room. I know that. Okay, I said 2:17 p.m., so that would be yesterday. I rolled up from 175 short calls to 180 for a 45-cent credit. Okay, credits got a little tighter on this reversal. Previous credits were anywhere from for 90 cents all the way up to $3.85. $3.85 was the top covered call premium that I was managed to capture, and that was on this gap down over here after earnings. I sold covered calls with gap down on earnings. I bought back the covered calls, $385 per contract times 3. Okay, so over $1,000 there. And just kept rolling my calls down for credits, $1.95, $2.90, $1.50, $1.20, $2.80, $3, all the while bringing my cost basis down. My cost basis, last time I calculated, was right around 140. That's from, we got into Apple over here back in January. Just bought some shares, just kept adding. So, maybe we get a follow through on Monday. I would love to see a close up here. All right, this is Apple. Gap down. That's where we made $3.85, $385 per contract times 300, three contracts. And since we've been moving sideways, you can see that 100 period just flat. 200 day is still upward sloping. So giving me the cue that I should be continuing to sell covered calls. Going to get a little bit harder as we start to rise because I don't want my shares to get called away. Just need to see implied volatility pick up quite a bit. All right, so that's Apple. NVIDIA we talked about. AMD was another good one. We finally got our 105 test. We went right through the 50-day. 106 was a major level for calls. The call wall up there at 106. We stopped right in that area. Okay, that's AMD. Micron earlier in the week or midweek. Was it yesterday? Wednesday, Thursday, follow through today. I think Edmund, you were looking at Micron, right? Doing well. John Smith, you were trading Snowflake today. Big move on Snowflake. Congrats on Snowflake. Snowflake up $9, 6%. John Smith from my neck of the woods.
So, for instance, Barclays essentially re-rated the stock basically to an overweight. They maintain that, but they just lowered the price target to $31 from $39. Now that's about
Snowflake. Look at that bullish candle. Snowflake with a bullish engulfing candle. A lot of stocks look like this. Shorts covering, new money coming in. Okay, let's look at a few other names. Uber had a nice day today. Uber, looking for that to follow through. Okay, nice bullish candle. Not a bullish engulfing, but that's good. Nonetheless, histogram bar is shorter. Stochastics turning up. MACD turn. RSI turning. Closing in the upper half of the daily range. Looks good. A lot of stocks turning. Amazon, I think we covered Amazon, right? Amazon. Yeah, Amazon. Okay. New York FANG Index, we covered that. 10 stocks, each about 10% weight. New York FANG Index looks good. Nice bullish candle engulfing. All right.
reaffirmed its earnings guidance for 2024, which is higher than 23. But I think the challenge has been that 1% organic sales growth, which is
New York Fang. Okay, a little selling at the high. We talked Microsoft, right? Microsoft. Yeah, big. No, we didn't talk Microsoft. Move through the 50-day. Okay, similar to what we were thinking on Tesla. When we move through the 50-day, we look for a follow-through day. Okay, so we got the 50-day. We had a doji yesterday. We pulled back a little bit, looking for a bounce and a follow-through. We're not going to move up every single day. Unreasonable to expect that the stock is going to go up. I don't think anybody in the trading room expects that. Maybe if you're a new trader, when I give you a buy signal, it doesn't mean that the stock's going to just keep going up relentlessly every day. Sometimes you have pullbacks. The two brothers, Back and Phil, they're always around. Back and Phil. Okay, so Microsoft, we backed off. We filled in some of this. Now we're filling in a little more. We're pushing above the 50-day. RSI is rising. Look at the volume. Okay, you got 100 million shares traded last week. About 100 million, almost 100 million this week. So 200 million shares trading hands in 2 weeks. MACD's crossing. Look at the histogram bar. Finally went positive. Stochastics firing. Stochastics telling you, look for closes in the upper half of the daily range on a rolling basis. 14 days. 3-day crossover. Looking good. Following through. RSI right. That looks beautiful. Look at volume by price over here. Once we get above this level right in here, about 330, 335, we should see acceleration because there's less volume has traded up there. There's a memory, if you will. People who trade, let's say you're over here and you bought this week in July and you saw Microsoft pull back. What are you thinking right now? You're probably some people are probably thinking, oh, let me at least get back to break even. Let me get to 350. I'll sell. So we'll have some bag holders here. Understand what's going on. Once we get to this level right here, this histogram on the left, we start to look for people who got stuck. Not everybody, but some will sell because, you know, they don't have any other strategy or thesis. Maybe they were following somebody on StockTwits or on Twitter X, and they don't know why they're trading Microsoft. I'm trading Microsoft because I think it's going to be $600 by next year. You know, and along the way, I want to sell covered calls and day trade and sell credit spreads. All right, but that's a big bullish candle. That's telling you something's going on in the markets. And when you look at the volume, you can see institutions. Does it mean it's going to be up every day? No, but I'd like to see a follow through on Monday. Certainly a nice way to finish the week. So Microsoft looks good. Let's look at the software sector. Software sector, that is, can we look at the software sector? Where is it? XSW. Software sector reversing on a bullish engulfing of the week, basically. Volume picking up on Wednesday. All right, so we're looking for the software sector. Spider software sector and services, looking for that to follow through. We had some other stocks that were looking good, like Palo Alto Networks. Big bullish candle on Palo Alto. We had Fortinet moving higher. Big move on Fortinet. And Fabrinet. Here's Fortinet. CrowdStrike. Beautiful. Okta, OKTA. Security. Big bullish engulfing candle. All right, so I'm sure there's a lot of shorts in there too. I don't know. Market looks pretty good. Yesterday, day before, I was telling you how awful everything looked. Nothing was really set up. All right, so this is only day one. I'm not changing my thesis on one day of bullish activity. We still need to see a follow through on Monday. Okay, look at IBB. 3 white soldiers. That's a beauty. That's probably one of the most powerful candlestick patterns other than maybe a Morningstar Doji. I think this one's supposed to be more powerful because it shows 3 intense days of buying. You know, technically you got a 3 candle reversal on a doji on Tuesday or a spinning top. Wednesday, the hammer time on Wednesday, volume picks up, MACD turning, stochastics rising, RSI still needs to get above 50, but looking really good for biotechs. We want biotechs to continue. We want real estate to reverse. Okay, real estate got hammered for the last couple of months. All right, volume's starting to come in at the low. What do you think institutions are buying? You think they're buying at the high? They think they're buying at the low. All right, let me just double check this real quick. Okay, number of stocks trading above their 50-day, quickly approaching 20%. Big candle, that looks good. At support, I like when everything plays out. You know, I'm one of those people, I learned from people like Tony Dwyer and Marty Zweig and William O'Neill and Peter Lynch, etc. You know, you got to watch the money flow. I'm all about watching money flow. Now, money flow doesn't mean you look at something and you expect it to turn the next day. You know, we've been looking for the markets to turn, and this is only day one. Okay, so it's day one. We're looking for the reversal. Now we're looking for all of the underpinnings for a complete turn. This is only day one, so we're looking for day two. That's be Monday. But we want to see a strong close too. Stochastics, MACD turning. Transports got nailed over the last 10 weeks because crude oil was on a mission. What's crude oil doing now? Crude oil's gapping down several times, gapping down. Okay. Brent crude. Okay. Dropping off. Commodities. You want to see commodities moving lower. If you're bullish, you want to see commodities moving lower. Deutsche Bank commodities tracking fund. All right. Big gap downs. Okay. This is Deutsche Bank. What else? All right. So that's that. Let me get back to the sectors. Crude oil. Transports. Looking for semiconductors. Look at the volume on semiconductors. Okay, we're not going to go straight up every single day, but this looks very similar to what we had with AMD. Higher lows, higher highs. NVIDIA, same thing. Higher highs, higher lows. A little bit tighter price action. Okay, so semiconductors look good. Look at the volume. You think buying at 140 with 50, 70 million shares trading hands over the last 10 trading days, they started at 140. They're up 7-8 points. You think they're done? After the markets have pulled back 8%, you think institutions are done with semis making $8? Yeah, me neither. I think they're looking for a lot more into year end. XBI, of course. Crude oil equipment and services. XES. So what we're looking for here is for this to consolidate and push through 50. Once it pushes through 50, we'll look for the next upswing in oil and gas equipment and services. All right. So materials. Okay. Remember, these were all oversold coming into this week and last week. Oversold. Stochastic was oversold, turning up. Okay. We're looking for turning up. MACD turning. Our volume could be a little better on materials. A couple of up days. Materials look good. So if any of these ring a bell with you, if you got something in these sectors like communications, what was communications driver today? Look at Meta. I believe Scott Zell, you were in this one, right? Maybe Acceleration. A couple other people were in Meta, talking about Meta this morning. Nice follow through. So that's communications. You also got Google in there, Charter Communications, Fox, Netflix, Roku. What's Roku doing? Check out Roku. Okay, so that's communications. And note that communications, note stochastic. Okay, these were oversold. Look at how they're improving now. MACD's crossed, volume's picking up. RSI rising. So you should be pretty excited about this. Okay, we've been waiting for 2 weeks for this stochastics to turn. It got oversold. Now we're ready for the move higher. Okay, energy pulled back. Looking for that to follow through. Financials got nailed Monday, Tuesday, following through on a shellacking since the third week of September. This kept moving lower. Now we got buyers stepping up. Look at the volume. MACD's turning, stochastics, and we got banks reporting, JP Morgan and PNC on Friday next week. RSI is rising. So these are likely to continue higher. Maybe they run into resistance at the 50-day. Left to be seen. Just because we're reversing today doesn't mean we can't get knocked back down. Okay, XLI industrials. Industrials have looked terrible. If you recall, we were looking at industrials this morning and earlier in the week, and we saw all of this was red. Okay. We saw all of this was red in the industrials. Now it's everything is green. Look at that. What an improvement from this morning. Wow. That's an improvement worth mentioning. Okay. All right. So that's industrials. All right. So industrials look pretty good. Maybe you like Caterpillar. Caterpillar had a nice reversal today. Caterpillar. Okay. Big bullish engulfing candle on Caterpillar. Does it follow through next week? Maybe. Not my favorite setup, but I want to see all of these stocks moving higher. Industrials, tech. Look at tech. For the last week and a half, 2 weeks, we've been very strong considering the markets were moving lower. RSI rising through 50. Look at the volume. Okay, you got about what? 40 million shares trading hands in 2 weeks. Stochastics rising, MACD crossed. I'm not telling you anything you don't know. I'm just going through these because it has opportunity written all over it. Consumer staples, the things you need in a crisis. Consumer discretionary, you don't need. These are things you need. Got a hammer forming on 20 million plus shares today. So maybe this turns. Okay, stochastics oversold. Maybe next week we can see an improvement there. Utilities. This had a little scare in it this morning, starting to bottom, if you will. Stochastics turning, MACD turning, RSI oversold. Healthcare, you know that Novo Nordisk and Eli Lilly, Merck, Johnson & Johnson, those are looking a little better. Check out Gilead, Pfizer, and the rest of the group. Look at the IBB and the XBI. Biotechs look better. 3 white soldiers turning, looks good. Consumer discretionary, if you're bullish, you want to see consumer discretionary performing. It's still basing, looking for a follow-through. RSI rising, MACD turning, stochastics turning. Retail, we want retail to continue. We want retail to continue. Okay, retail putting in a reversal candle, maybe. Volume, stochastics, MACD turning. All right, so that's all sectors. I didn't cover all the subsectors, but you get the gist of it. Markets are looking more bullish, day one. We need to see VIX back off towards 15, 16. That would be good. That's creating a tailwind. And we have puts monetizing. In the money puts are monetizing, which is helping propel this market higher and higher. Okay, so looking at gamma for the week, okay, here's what we're dealing with. Okay, here is overhead 4,300. It was 4,300. Overhead was 4,300. What do you think all these puts are doing? Puts that expired today as we started moving higher. What do you think they were doing? You can see there's a lot more puts. Most of you know this. Some of you don't. As we start moving higher, people that have profits and puts, they start taking profits. Once they take profits, the dealer that is short those puts, you're long the puts, they're short the puts. The dealer closes their short put position. They buy the underlying to get the delta neutral. As this starts moving higher, it creates a feedback loop. What's happening? We'll continue to move higher. We hit 42.50, more and more puts. All these blue lines down here, all these puts are starting to monetize. More and more puts, more dealers covering their short put position. Buying the underlying creates a big feedback loop. We keep moving higher. Here's 4,300. That was a major level. I didn't think we'd get above it. We did. Next level, 43.25. Can we stop there? Geez, 43.50. So we know what we got overhead. And if as we proceed higher, there's fewer and fewer puts. So we want to get more puts filling in here and more calls for next week. So that looks really good for next week. Okay, let me take a breath. I'm going to take a break and I'll be right back.
The Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
There's no place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market news. The watch list with me, Nicole Kennedy, 2 p.m. Eastern on Schwab Network.
Welcome back to the Watch List. I'm Nicole Pedalini, live on the floor of the New York Stock Exchange. Look at more movers for you in the market right now. AES stock is among the S&P 500 worst performers today. UBS downgrading the stock to neutral from buy, cutting the price target to $13 to $2. The analyst voiced concern that higher interest rates would have this utility company under some pressure in the near term. Mondelez stock is in a nosedive as beverage stocks continue to drop off. The Costco CEO Walmart made recently about weight loss drugs such as Ozempic affecting snacking sales. Mondelez shares have lost nearly 10% this week. The stock is just 20% above its 52-week low. MGM shares up nearly 5% today after the company disclosed that it's expecting a $100 million negative impact.
All right, give me a couple more minutes. I'm just going to get myself something to drink. I'll be right back.
Third-party obtained personal data from MGM customers in the breach, and MGM plans to offer those customers extra monitoring and identity protection at no cost. ExxonMobil and Pioneer Natural Resources, while those shares on the move, Wall Street Journal reporting, Exxon is close to a $60 billion acquisition of Pioneer. Pioneer is largest in the last 2 decades. And here's the look at the latest move on Bitcoin, which is back in the green again, much like the market. Let's check that out at this moment. You can see that Bitcoin is trading at a level of 28,125. Is the pullback that we've seen in the last, let's say, 5 weeks, is that an opportunity? Quinn Tatros thinks so. Quinn Tatros, Managing Director, Jewel Financial, joining us right now. Good to see you. So look at that. I was going to say you're bullish when people are bearish, but look, everybody's joining you today on this late Friday. The market has done a complete about face. What did you make of that today?
Yeah, Nicole, admittedly, I wrote you that note last night and early this morning before we got that data. But if people use kind of common sense, this data we got this morning is picture perfect for the bulls. And the initial reaction was just off the headline number, much hotter than anticipated jobs data. But when you look into the data and you realize that you have a ton of people that are going back to work and the labor rates or the wages are not increasing at that clip, that's the best of both worlds. You now have employers being able to sort of bring in new employment and not have to pay a significant amount. So it really is the best of both worlds. The dip was bought up very quickly. And it just goes to show you that when you get many people leaning on one side, like we've seen over the last couple of weeks, it just takes one piece of news to trigger a massive move to the other side. That's what we're seeing today.
Yeah. By the way, I am seeing headlines from President May from the UAW, just for one moment, you can stay there with me, that they said stand by, that they do have some breaking developments in the negotiations, and that President May will join as soon as possible, so bridging their patience. But when that news comes out, we'll suddenly have it here. In the meantime, as you look at rates, which keeps sort of being today, back some as rates came off the highs, as yields came off the highs, markets turn around and go higher. What do you make of that? We're basically at the highest level of rates since 2007.
Is where it is. It's the biggest headwind out there. And now you don't just have the Fed that has been raising on the short end, but you have the uncertainty regarding the political concerns and so forth. And in my opinion, that's been what's moving on the higher end or the longer end. So we're sort of getting into both sides. But in our view, we're at the peak of this rate cycle. And with stocks having been hit, many both stocks, tech stocks being hit very hard, this is really the opportunity. Even after today's run, there's still so many stocks that are out there trading at much better valuations than we just saw a few weeks ago. And we're coming into a seasonally strong year. So in our opinion, we're very bullish going into the end of the year.
Another Tesla we talked about, I'll give it 500 shares. You getting at a good price? Okay. Sure, how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders and commission-free online trades. Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
Yeah, this is best of breed. Obviously, it's one of the Magnificent Seven, but you're talking about a stock that has over $60 billion in cash, literally no debt, and trading 20 times forward earnings. So even if there's a headwind out there about the potential breakup. But if this company were eventually to break up, the sum of the parts might be even more valuable than the stock as is. Who wouldn't want to own YouTube, for instance? So this is a company where we get market weakness, where stock goes back, we're a buyer. Is interesting. A name that we actually started today. We've been doing some work on now for some time. This is a stock that's trading at ridiculously low levels as far as valuation is concerned. 9 times forward, growing those earnings around 15%. Traditionally in the auto parts manufacturing world, traditional combustion engine, but also now moving rapidly into the EV space. It's been hit just based on market weakness, but also additional weakness here on the UAW strike. But it's a name that, and again, as it's pulled back, it's a name that we think is going to provide incredible value over time. So we started the position today. It's one that we'll watch and monitor over the next several months, hopefully years. And we'll continue to build the position. Precise day, right? That's virtually impossible. So, you know, you're looking at areas that are weak or strong, and you look to take positions and add over time. So, you know, bonds are attractive here. They've been absolutely slammed again on the longer end as well. And investors now can take a position whether they go out and buy the long bond on their own or they trade an ETF like the TMT, where you're getting an incredible yield and you're getting an asset class that is really 2 to 3 standard deviations on the downside, something we've not seen in many years. So minimum, you're going to be paid to just
All right, we continue to rally above 43.13. Looking good. Looking really good. Pushing a bit higher. All right, so yeah, looking really nice. Looking really nice. Oh boy. Oh man, the strength is just too much. Wow. Nice day. Happy to be here on a day like today. All right, K-Web. Nice move on K-Web. Incredible strength today. Incredible strength. Looking good. Uber. Okay, a lot. Starting to see a little bit of profit taking. Oh, there goes Cleveland Cliff. On the move, Cleveland Cliff. What's U.S. Steel doing? U.S. Steel, big breakout today. U.S. Steel. Pow, pow, pow. Look at U.S. Steel popping here. Breakout on U.S. Steel.
High ticker plus 800.
Nice follow through on U.S. Steel. I just made some good tea. Some tea. Really nice. Special tea. Nice. Nice, Rick. Yeah, I'm watching all these too. There goes Apple again. Apple going for 180. I'm going to have to roll these calls up again. Come on. Really don't want to get my shares called away, Tesla. If I did, they would be about $12,000. That wouldn't be too bad. I just want to hold on to Tesla, hold on to Apple, and just keep selling covered calls. It's relatively inexpensive. Well, it's starting to get expensive. $177 per share. When it gets over $200, $300 per share, it gets a little more difficult. Got to start much lower. Okay, so S&P is just blowing it out here. A lot of shorts monetizing their puts.
We're making their chargers work just without construction, without electrical work. As for the scale of this thing, I mean, I believe we certainly know that in the United States, about 300 million cars. You're going to need one plug for every 5 electric vehicles on the road in the future. So you need something in the order of 60 million chargers. There's only about 140,000 publicly available chargers today. So your comment about 1% wasn't in the least bit facetious. It was absolutely accurate. In fact, you might be being too generous. We have a huge task ahead of us, and we're really looking forward to it.
Yeah, and you know, here's the other issue that I know you know, but the electric grids can't necessarily support.
Tesla's still pushing. What a beautiful day. What a beautiful day. Google's still marching higher, going for 140. Nice. Got the Google June 140 calls. Those are doing really well. Synthetic long shares using leap options. Tesla. Yikes. Tesla's still going. Still driving higher. Ooh. Look at this market. Crazy. Uber turning. Okay. All this looking good. Halliburton higher. 2.65%. AMC trying to get above 10. AMC is trying for 10, Cayman, if you're listening. AMC.
Hi, took alert plus 800.
have been very clear in their goals. I mean, if you look at GM, you look at Ford, Stellantis, the big three just been talking about a minute ago, all of them have goals to have fully electric fleets in 2035. That's not surprising because they won't be able to sell anything else in Europe.
What a freaking move. Yikes-a-bee. All right, Microsoft. Look at Intel. Intel up 1% now, 40 cents. Intel. Cleveland Cliff, big move there. U.S. Steel going. U.S. Steel. Nice follow through on U.S. Steel.
News, folks, as you see that once again, the UAW is now causing.
All right. All right, U.S. Steel going more. I'd say that's bullish. I'd say that's a bullish signal. Yeah, looks good. All right, there goes U.S. Steel. Oh, look at this frickin'. Oh, those monkeys are making this thing. Oh my gosh, I'm actually going to be. All right, looking good. Oh man, what a day. Don't have very many days like this. That's for sure. Look at this freaking market. Wow. Very impressive. Oh boy, nice Friday, eh? The funny thing is, if you're not trading or you're not involved in the markets, you miss these days. You know, you don't get many of these huge run-up days where everything is working and just about everything that you put money into does well, as long as you're buying dips. Always buying dips. If you catch yourself chasing, hesitate, wait for a dip. You'll be much happier on your entries if you're not chasing. Chasing would be anything plus 100% ATR, that kind of thing. All right. Had to restart Schwab there. Okay, there we go. AMD still looking good, eh? AMD cruising into close. AMD got 107 on AMD. Nice work there, folks. All right, so nice up here. Looking for more. Higher highs, higher lows. They just keep buying. Shorts keep covering. A little profit taking at the highs. All right, stocks, a little profit taking. Should be expecting some profit taking into almost 3 o'clock. We got 10 minutes to go. It is 250, 250 on the East Coast, the best coast. All right, it's S&P. Pretty much on autopilot today. As we reversed on a buy signal. We reversed on a buy signal today. Right around 10:20. 10:20, we got a buy signal moved above VWAP. That was right around 42.32. If we can get another 10 handles or so, we'll have 100 points there. From the low, 42.20 up to the high, 43.25, more than 100. All right, nice move. SPY up 6 handles, 60 on the S&P. We had some nasty moves lower. What was it, Tuesday, I believe. Finally taking back control a little bit on one trading day reversal. Looking for next week, Monday, Tuesday. AMD about to trigger a daily buy signal as well. AMD on a daily. Okay, we're about to see a buy signal on the daily right there. It's about to trigger a buy. Pretty exhausted, I would think, as far as fuel for upside. Carvana going here. Carvana going. Oh, yeah? Rick, are you listening? We're about to trigger your slow-mo. Slow-mo's about to trigger, according to Captain. Slow-mo going to trigger. All right, looks good. I just told him. That's pretty funny.
Not in the imminent future. I think, the Fed hasn't achieved anything yet because inflation's not quite yet its target. But I think we're on a solid path right now. We were off, in sort of the wilderness for a little bit there.
All right, looking for a higher low. We got plenty of time to run this a little bit more. All right, let's go look at Rick's slow-mo trade. All right, so here is SPY, and the object here is you're looking for the crossovers of this teal-colored line when I pull this up. Okay, you're looking for this teal-colored line. Price to cross over through the teal-colored line. Initially, we're probably going to reject right there at 432. If we get through it, pull back a little bit, and then follow through. We're looking for 3 months out, I believe, a 40 delta. I think you said 3 months out of 40 delta. So be looking forward to that. Okay, more fade for now. All right, looking for that AMD move. Don't know that we're going to get it today, but about to get a buy signal. There goes Intel. Intel pushing the high of the day. About to go. Intel looking good. Volume. Volume on Intel in this last candle. 2-minute chart. Looking for a follow through. Okay, looking good. Tesla, new high of the day. All right, one more shot to the highs. Shot to the highs, and you're to blame. You give trading a bad name. Wow, 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 wow. NVIDIA looking like it wants to go. All right, take care, Captain. See you later. One more shot to the highs. Let's do it. Let's do it. Let's do it. FANG stocks are still looking very, very strong. Can't believe I sold Microsoft too soon. Shizzle. Oh well, happens. Yeah. 43.27. 43.41. We're close. S&P. Let me go back to S&P. S&P. Mm-hmm. 43.19. All right, starting to pull back a bit more. All right, just starting to come in for a little profit taking last hour of the trading day. Tom Lee on.
Inflation is diminishing next year, and people think the Fed is done or might cut. That's good because bonds could rally, but as we know, I mean, if that happens, we know PE is going to go up a lot, so stocks will rally even more.
Let's bring in CNBC contributor Bryn Talkington of Requisite Capital. Tom's going to join the conversation. So, Bryn, I believe you heard everything that Tom had to say. Do you agree?
Well, I think that going back to like the technicals, let's just go back there. I think that we started the week with only about 15 stocks above their 50-day moving average. When it gets below 20%, that's really bullish from a short-term bond.
You hear what you just said?
That was right on top of the S&P, almost getting to 4,200.
Brent just said what we've been saying all week.
And I think, great job on a midday rally. And so I think we can definitely rally from here. Don't forget
Number of stocks above their 50-day got to a washout low. Definitely looking for a bounce.
So I think that's going to help. I do think, though, over the next few months, outside of seasonality, which is a real thing, right? I would never discount it. I think over the next 6 months, though, we're going to be much more range bound between this, let's say 4,200 to like 45, 4,600. But I still think there are so many cross currents. I think on the earnings front, though, if you look at Goldman Sachs, I think Hobson does good research. Technology is where you're going to get all of the earnings growth next year. So they're looking for 10% earnings growth, year over year from 23 to 24. And so we're going to have to get that because those stocks are more rich. And so I'm not in the consensus that I think 12%
Come on, let's get a little rally end of day. A little bit more rally.
But within technology, I think you have to be, somewhat judicious because while, if you look right now, Scott, Microsoft and Apple's charts look terrible. Their revenue and earnings growth haven't been as good as, let's say, a Google and Microsoft. I mean, a Google and Meta, whose charts look really strong and continue to gain momentum. So it'll be interesting to see if we start getting some dispersion of those mega cap names, especially as earnings come out next quarter. We'll see, but I think that's a pretty decent probability. Some dispersion of the mega caps starts to play out.
I feel like, Tom, that's a long way of saying that, Bryn, I'm not necessarily as optimistic as you are, Tom, that earnings are going to reach the level that some like Goldman and others suggest that they might. Now, they might in mega caps. That jury's still out, but certainly not elsewhere. So, Tom, how do you respond to that?
Well, I mean, I think there is a pretty long list of worries out there. Because if I were to add to Britain's concerns, I would add China and Europe and the war and escalation of the Ukraine war. But in this environment, which has been incredibly challenging for companies, they're able to produce 7% earnings growth now in the face of the Fed relentlessly raising rates. But in the next 12 months, they're taking their foot off that. Oil, I think, might have made a local top. Wage pressures went from nearly 6% on their way to 3.5%. And a 10-year environment like this with nominal GDP does point to very good earnings growth historically, and the PMIs have convincingly gone up. The ISM.
I just feel like they're going to take some profits off up here.
So to me, it's pointing to an economic momentum that's materially improving. So I think that rate of change is what's going to compel stocks to get PE expansion.
Tom, what do you make of weakness that we've seen?
We got a little bit more than 47 minutes to go. 47 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's been a blast being here today. Friday, the 6th of October. Only the first full week of trading. For the month of October, we have shown signs of a potential reversal. It's only day one, so we want to see a continuation on Tuesday. The likelihood is that we will, given the number of stocks that have been trading below their 50-day was almost 100%. We got very close to 100% trading below the 50-day. That's usually a sign where institutions start to look for, buying and a reversal. Brent Talkington just said the same thing. So we're looking for that reversal to continue, this reversal today to continue into tomorrow.
And staples, I mean, it's tough because that's a Greekflation sector, and now it's on the margin some strange stories about calorie consumption could be declining. I mean, it's tough. I think I'd rather own technology stocks over staples because at least technology stocks you don't have to worry about calories.
Yeah. Yeah. I don't know that you'd find too many people fighting you on the idea of owning technology stocks over staples, so I don't know if that's necessarily a fair fight. But Bryn, how would you address those two sectors, or just simply other areas of the market that might work outside of big tech?
So I think going back to utilities and staples, we were looking, if you look at the net debt to equity of every sector in the S&P, which three sectors have the highest debt to equity ratio? Utilities, real estate, and staples. And so I think that those three areas.
Okay, can we get a nice little run here?
Are much more susceptible to the D of the D and the E's, right? To rate rises. So I think this is a unique time, typically later stage in the economic cycle. Those would be doing well. We have a whole new playbook. I think that people can count on large cap technology to know what you're going to get. You might not get great revenue growth, but you're going to get good earnings because they're all buying back their shares. I think from an allocation perspective, what my concerns are is that I agree with Tom that the economy is probably going to stay really strong, but for the wrong reasons, because it's government led. Because don't forget, we had the 1.9 trillion American Rescue Act, and then three other ones underneath them. Those dollars, Scott, need to be spent. There's billions and billions of dollars that need to be spent by 2025. And so you're going to continue to see municipalities doing very, very large infrastructure plans. And so bottom line what does that mean? That's good for the economy, but what else is that? It's inflationary. And so I just think we're in times where the government is spending like they're trying to get out of a recession.
Yeah, I love fish and chips.
And to me, that ends up causing just
Vinegar malt, something about that, just really good. Yeah, need to take a break. Enjoy. I'm going to sleep late tomorrow. Probably get up about 6 instead of 5. I don't need to cut the grass because it's gotten a lot cooler. Maybe just go off to the beach or something tomorrow too. Anyway, enjoyed being here. Oh, excuse me for yawning in your ear. I'm not sleepy. I'm just, guess I'm not breathing a lot. Anyway, thanks. You too, Vanter. Have a good weekend, Vanter.
So as long as cars and housing aren't accelerating, inflation is on a glide path lower.
Tom, what's your target for the end of the year for the S&P? You still have one, correct?
Yes. Scott, I think we're around double digits, so I think we're going to get over 4,800 by year end. I mean, a lot has to go right, and I'll tell you, there's a lot of damage on the last few weeks, so it may not get to 48, but I think directionally is the correct spin. I think we have a very strong reflexive recovery because interest rates are nearing the end of the parallel rise.
We'll talk to you plenty of times about it. I appreciate everybody. Thank you, Bryn. We'll talk to you soon. And Tom Lee, of course, Let's get to our question of the day. We want to know, do you believe in the soft landing scenario for the economy, just like Tom Lee does? You can head to @CBC Closing Bell on X to vote. The results are coming up a little later on in the hour. We're just getting started here. Up next, mapping out the market. T. Rowe Price's Sebastian Page is still reluctantly bearish. Will he ever change? We'll ask her next.
Looking for one more pop. Come on, let's rally this. Got some volume coming in here. Shorts covering. You can see on the live screen watching the shorts cover here. All right, shorts are starting to cover. Nope. A little bit more selling. All right, so we've had a really good day. I'd just love to see it close at the high of the day for once. Yeah, he does. He does cut it from time to time. Yeah, I don't mind. I don't mind cutting it from time to time. You know, Son usually does it. Come on, let's rally this.
I think we're getting closer. We would probably consider closing our underweight, which is about 1% now, so close to neutral, around 4,100 with a higher VIX and negative sentiment. That might be enough to get us back in. I'm still worried about three big macro risks. Rising rates, obviously. Inflation, I think, has risk to the upside. And valuations, just a compressed equity premium. But no, Scott, we're not panicking, but these are serious macro risks to worry about.
Come on, let's rally this punk higher. Let's do it.
I would say I've heard this, I've seen this movie before, and yet the market's up quite nicely this year. The S&P is. I don't care whether it's been driven by a handful and a half of stocks or not. It is what it is, and it is where it is. So how do we deal with all that?
Look, I think the rising rates risk is heating up as we speak. The 10-year is up 150 basis points in 6 months. With that velocity in rate hikes and in rate spikes, especially in the long end and the disinversion, things can break. So that remains a risk.
All right, nice reversal here. Starting to head back up towards the highs with 36 minutes to go.
If you look at GDP growth expectations starting of Q3 this quarter, we were at 0.3 and we're now at 3%. So this is just annualized for this quarter, and it tells you how quickly GDP growth expectations have come up. And the other thing we've talked about Scott, a reason why things aren't cracking yet is this massive amount of money in the system. And we talk about excess savings running out. Excess savings is a bit of a wonky definition. If you look at money market funds, AUM, and you look at checking accounts, the amount of money that's in the system, a lot of it is at the top, and the bottom quintile of earners is really tapped out and loading up on debt. But the total aggregate amount of money, I call it the blob of money, it eats all the negative headlines, Scott. So those explain what's happened this year, and with growth surprising on the upside. And, you know, ultimately, and the reason why we're close to neutral is there is oxygen for markets above 5%. Just look at the 60 years before the great financial crisis. The average 10-year was 5.8%.
Yeah, I was just saying that last week. This guy's dead on. T. Rowe Price. Sebastian Page from T. Rowe Price.
I know the rates are 5%, but we're just normalizing. And it's like, yeah, I know that the economy's strong, but that's just because of all the stimulus that's in the system. And I'm thinking like, yeah, and maybe that's enough of a reason that we're not going to have the gloom and doom lag effects that we otherwise would without all of the stimulus in the system. And that's been the most difficult thing to
I haven't had one of those end of day runs to the highs and beyond into the close. Haven't had one of those in a while. After a big run today, we're up 6 handles on the SPY. 6 handles on the SPY. Futures up 61, 62.
A spike in the VIX, a real deterioration in sentiment. I think we're getting closer. And in the meantime, where we've been adding to stocks this year has been in parts of the markets that haven't participated in the rally. We like real asset stocks, for example, stocks of energy companies, utilities, stocks of real estate companies, and with a lot of active management and stock picking in it, but also metals and mining stocks. So those real asset equities have been an area where we've been incrementally adding to stocks. They haven't participated, and we think there's upside risk to inflation. The labor market remains incredibly strong, and that explains the strength of the consumer, but also it poses upside risk to inflation. I think the prints today aren't that encouraging if you put them in the context of all the other numbers we're getting on the labor markets. They are strong.
Microsoft into the close. Look at these markets looking really good.
Risk to inflation, therefore, you know, high rates. Why are you
Wow.
going to work in an environment where obviously they're moving in the opposite direction?
Oh, here we go. Here we go.
Right. It's part of a diversified portfolio that has some measures of protection for the ability to raise cash flows with regulation and with inflation over time. Now, we like to protect against inflation across different types of stocks and different types of inflation. So when regulators allow price hikes for the utilities, that helps you over time protect against inflation. Meanwhile, you get pops in energy stocks and metals and mining. So it's all part of a diversified portfolio that we call real asset stock.
But tech's not at the top of your list.
Sorry?
Tech is not at the top of your like list.
No, look, we're neutral between value and growth. There are reasons to like growth stocks, just the valuation is really high. You know, at the end of the day, when I talk about my 3 big risks, I talk about rising interest rates, I think about inflation, I think about valuation. Really, the one that bugs me a little is the valuation.
Hey, Gary, hold on a second.
The risk premium. So we're neutral. We think AI is real. We think it's going to help
That was my business partner, architect.
I stand by his statement that AI is real, but as asset allocators, Dom selects securities. As asset allocators, we got to look at growth stocks overall, and that's how we come up at.
All right. Looking good. Looking good. Let's go. LETSGO.
Thank you. All right, that's T. Rose Sebastian Page. Up next, class is in session, even on this Friday. The Dean evaluation. Aswat Damodaran of NYU. He's back. He'll break down his take on the recent market swings and the one upcoming IPO he says looks promising. That's after the break. And as CNBC celebrates Hispanic heritage, we're sharing the stories of influential Hispanic business leaders with you.
Since I was a little girl, I have been surrounded by beauty in our Latino culture. Watching my mom take care of her skin, put on makeup, my aunt.
One of the 4 snapshots of inflation that we get every month, like PCE data, like CPI, like PPI. We get 4 looks at inflation. This is a big one. And remember, the Fed isn't fighting a strong U.S. economy. Even though
All right. Follow through.
that we got in terms of jobs and employment and oversized, and the revisions were enormous. On the upside, for the first time, it was still the wages data that was muted. And that, I thought at the time, was a number that the markets could eventually embrace because the Fed's fighting inflation. And that inflation.
All right. Google still going here. Nice. Follow through. NVIDIA high today. Thank you very much.
Talking point for the Fed is how long? How long will rates stay at these levels? I think Jerome Powell has them restrictive enough. I think he's got a ball that he feels is rolling downhill, and he doesn't need to push it any further. Now it's just a matter of how long he has to see it roll downhill. 2% is the target. I think that this is going to get real interesting, but this is an epic day in the market, Oliver. It was. These are the days in the trading pit where you never.
Okay, we're back up to the highs. Got a little rejection.
Low tick alert -800.
Obviously seems to bode well, but the numbers on wages still are positive, right? The numbers for inflation, of course, are still positive.
A little profit taking coming in. All right. Makes perfect sense. People will take profits up here. We're not going to close at the high of the day. I would love to close at the high of the day, but, doesn't always turn out that way. Google. Nice.
Trades, but interestingly, the one here that's the least bullish with is in the tech sector. So let's start there for XLK. Is a big trade, unique trade, or why to catch your eye?
Well, it was a bigger trade. It was a large neutral to bearish trade, selling calls here.
A little bit more profit taking. We've got 26 minutes to go. 26 minutes to go. What's U.S. Steel doing? U.S. Steel. All right, so it blew up to 33, and now it's settled down. U.S. Steel.
Strike calls at a 55 cents here until this one expires. Break even at 171.55.
And looking to make a max profit of $22,000. Excuse me, $220,000. Wow, I hadn't talked there for a second. This trade can absorb about 2.25% to the upside before it starts to lose money.
Cleveland Cliffs at the high of the day, 15 and change.
It could be a covered call. It could be that they own shares of the ETF and they're just looking to generate some premium or perhaps sell at a profit here.
Just going through stocks at the end of the day. Don't forget, today is an expiration day. If you don't plan on getting assigned,
So this is a pretty fun trade. Basically, someone saying take your rally and stuff it.
XLU Utilities at the highs, reversing today. Sort of a tweezer bottom on XLU Utilities.
From a brief uptrend in mid-September or so around that level here. So, not much room to run to the upside. What this person thinks here kind of fits with the overall theme of slowing momentum.
That's kind of why I'm thinking also that this is unlikely to be like a covered call situation where they're, because would you sell it $2.50 away? Like, that's not really the move you make if you own the shares and you're just trying to hedge or something, right? I mean, like, that's a pretty close strike if you're just trying to play finger.
Yeah, nice job there.
But I mean, it depends. If you choose too far away, you get barely any premium then. So, it's hard to say. It'd be interesting to know what some of these traders were really thinking here. The best we can do is just try to use what we know and think of possible ideas.
Take care, Lele. Thank you for everything. All right. There goes Microsoft going. Microsoft going. Things are starting to go. Fangs are showing signs of an end-of-day run.
Well, it's hard to say. Once again, I don't know the answer to that for sure. And this is a company that I don't know if we've talked about too much on the shows at all, but the trade was very interesting because at the time I looked at it earlier this morning, it was like almost 90% of the market that it made up here. Someone bought 7,799 November 17th, 29 strike calls at a 46-cent debit. So a long haul trade, unlimited potential upside, expiring in a little over a month, and total risk of about $358,000 or so. And this is the kind of thing that I think is really interesting because it's kind of like insider buying. You look for insider buying to mean someone has big faith in what's going on at the company. And I'm not trying to say anything, illegal or anything. Not saying, insider buying in that way. Just, like legal insider buying.
Amazon going right now. Amazon going.
Yes, exactly right. Insider selling could just be perhaps they need some money or something, but insider buying and this type of trade too suggests big conviction on the part of the trader. And it was very large relative.
Yeah, I think so, Frano. I think so. Yeah, IWM.
So much more interest on that side of the market here.
Okay. All right, so pretty bullish trade here, looking for some sustained action for another $3.50 after a 5% pop today. Okay, nice find here.
Yeah, IWM. Worst case, I think it bases. Okay, let's go. Let's run this sucker. Come on. Just out of the money calls are very cheap.
They were the only sector in the red here, and Kroger was actually doing even worse than its broader sector here. We're breaking through the old lows from June. A lot of media reports are saying it's from recent comments from Walmart's CEO saying weight loss drugs like Ozempic would impact sales. My take on that is a little skepticism here because Ozempic costs more than $900 a month. I kind of wonder about that a little bit, but you can see on the chart there.
Yeah, Scott, I think you have a good one there.
From all the way back there about,
UAL? Yeah, UAL over. Airlines are overdone.
It's not looking great for this company today. But one trader thought that perhaps a very long-term view on this company is quite bullish here. So it was actually two trades. Plus 3,000 January 16th, 2026 year, 60 strike calls at a 297 debit, and also plus 5,000 January 16th, 2026, 70 strike calls at a 160 debit. The trades happened at exactly the same time. Probably the same person, given that they both are focusing on this far out strike price or calendar date here. And 833 days till we expire on this one here. So unlimited max profit, total risk. Yeah, exactly, Elite, exactly right. So basically looking to do stock replacement. So you get a similar exposure to the equivalent number of shares at a much lower amount of money. But you know the risk is that you don't reach your strike prices on the options here. You know, and these are quite optimistic here.
All right, VIX is starting to spike up. VIX shorts covering.
And you know the all-time highs in this company are only 62.78, so they're really looking for a big move. And you know it was.
All right, can we get a little follow through? This is pretty good. Best.
Long time to get there, and you gotta hit the strike, or else you just everything you paid up for this thing goes bye-bye. So interesting find there, a little dip buying action.
All right, a little profit taking. All right, this turned out to be a really good day. So enjoy. Do something nice for somebody. Hold the door open for an older gentleman, older lady. Say hello. Be surprised. People say hello that you don't know. Just make a comment. Make their day. Most people like to talk, as long as it's not a stalker or an axe murderer. All right, so we got a couple of minutes to go. We got 17 minutes to go. 17 minutes to go. Looking for something to happen here. Maybe get a little fun. Last few minutes, get jiggy. All right, so they're not going to push it higher. All right, well, hope for the best, plan for the worst. CSX, all right, so pretty decent day. I'm pretty happy. I don't know about you guys. I think the bottom is in. Speaking of bottoms, Frano, let's take a look at the number of stocks trading above their 50-day. We want to see that near 20%. That would indicate institutions have been buying. Let's see what tick cumulative looks like. Yeah, we're right at the highs. Tick cumulative, yes, has crossed. We're trading into the close, 3-1 up volume on the NYSE, almost 3.5, 2.5 on the NASDAQ, 3.5 on the NYSE. So that's good. Tick cumulative is rising. It's telling you institutions are buying more stocks than they're selling. Net. Equal weight index. Let's take a look at that. All right, big reversal candle, big bullish engulfing. We made a big deal out of this area last week or so. We held it. All right, we're almost at 20%. All right, so maybe by the close, this updates and will look a lot better. NYSE, let's see what the number of new highs versus new lows looks like. We'll come back to this chart. Okay, we're still below the zero line. Okay, let's look at NYAL. Okay, NASDAQ. A little bit better.
Which is really making this market struggle to have any conviction to the upside. So, you know, when you're looking at these things, you know, off the number of this.
Okay, advanced decline needs to improve. So we got some things that need to improve. Let's see. Let's look at VIX. VIX, VXV, and VIX. All right, we want to be green here. All right, we're green. Looking for higher highs and higher lows when this is green.
So I think that's kind of where the market drew its attention, and that's where we saw a lot of this strength coming out of gold and silver and U.S. stocks.
Bonds.
Looking to close near the highs of the day. Pretty impressive stuff here. And
10-year yield. Little reversal candle, but still bullish. There's still a possibility we chop around in this area. Like to see a close. We're closing above 4,300. That's good. S&P 4317. So we're pinning right to 4317. Looks like so far. Come on, get a little bit more lift out of this would be nice.
And if you're looking at these markets, even with the selling pressure, gold and silver have held relatively well over some good support pockets. If you're looking at like 1825 to 1830 has been a really good pocket for gold, and about 2070 to 2080 for silver has also looked really good. Really anything under 21 has looked pretty strong for silver. And if you're looking at crude oil, like you mentioned, crude has seen some selling, but we were on a spectacular run. We were in pretty overbought area. So, as we wrapped up the month last week, I think what you saw was people getting out of some positions, looking to reposition across the market. But crude having a nice kind of impressive day today, kind of chewing back up and taking back some of the ground that we were losing. So I still like the ground underneath crude. I think there's still a good fundamental backdrop to the long side.
Amazon going to close at the high of the day, it looks like.
And gold too, to your point, after
Apple close to it. All right, let's run this higher. We got 13 minutes to go, 13 to go.
And GM shares are doing all right today, so I guess maybe a little sign of progress, perhaps host the next gen.
Definitely sign of progress with GM here, because we did get updates from, of course, UAW head Sean Fain, who did say that there were significant changes in some of the developments with GM this afternoon, just as actually one of their largest plants in Arlington, Texas was nearing a shutdown. GM did consent to include their electric battery production within the UAW's National Master Agreement. Now, Fain did say this move to stand in contrast with actually GM's previous stance, which suggested that this was not actually feasible. So they are glad with that. The UAW president did say this development could refine the future landscape here of the industry and the union itself. Previously, there was a trend of reducing some of these engine and transmission plants and substituting them with some of these lower wage battery jobs. However, this approach now by the UAW appears to be proving more effective, at least when reaching an agreement with GM. Now, Fain did say he has the same expectations for Ford and Stellantis going forward. Other key updates do include that Ford initially did propose a 9% wage increase, but Fain said the figure is now 23%.
Okay. Come on, Amazon. Close the high of the day.
GM and Stellantis are currently offering around a 20% increase. Mind you, the ask was for 40%, but we are at least getting a little bit closer here. Both Ford and Stellantis have agreed to revert to the 2007 cost of living formula, which is this is a step that many thought would not happen. GM also expected to follow suit. There have been some wage boosts for these temporary workers, reaching $20 an hour at GM and Stellantis, $21 an hour at Ford. So while some of these prior negotiations did end in workers 8 years towards the full pay, UAW could successfully reduce it to 3 years at Ford, although GM and Stellantis remain at 4 years. So all in all, some updates, seems like some progress, although we have not gotten any news that this strike has sort of ceased here. But this is major developments as far as at least.
All right. Time is dwindling. 10 minutes left. Just sitting here, consolidating at the highs. This is the 1 minute chart. So let's go to the 5 minute, 15 minute. You can see we're just sitting here. Really good day today, though. We rally quite a bit. This morning, when we were talking, Scott Zell was mentioning the non-farm payroll numbers were very deceiving. Algos don't know the difference, though. They just see the number and they go, up, programmed to drop. most of that was added part-time workers for seasonal, right? And not so, and a negative number for new jobs added, regular workers. So that people started looking at it, and finally we started to see a buy, and now we're doing fairly well. It's day one just to start. All right, so we need day 2 and day 3. We need to see more and more stocks back above their 50-day moving average. You need to see that gauge moving up. Love to see a close above 4,300.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Welcome to Schwab Network.
Daily live exclusive content tailored to today's investor.
Broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights.
Example trades and stock-specific analysis featuring the smart bonds in the business.
No politics, no analysis ahead of the quickest events for the
All right, a little bit more fade. VIX all over the place.
Watch live 24/7, 7 days a week. SchwabNetwork.com. Schwab Network. How every investor traded every market cap.
All right, fading, a little profit taking. VIX is spiking up now with 7 minutes to go. A lot of stocks pulling back now.
-800.
Okay, I'm going to take a couple minute break. I'll be right back before the close.
Yeah, well, I think both are important. So the new high tells you that the market's still expecting, a likelihood of another Fed rate hike, and that we're still in the higher for longer environment because the job growth is so strong. But the drop in yields from the highs, pullback, reflects the fact that underneath it all, the important factor in the job report is wage gains. So the way you measure inflation is through price changes, and price change in wages was pretty subdued for like the third or fourth consecutive month. So that's something the Fed's going to keep an eye on, because one of the concerns it has an overheating labor market, sending us into some sort of inflationary spiral because wages are too strong. Well, actually, wages are not rising at a very rapid rate. They're kind of slowing down. So they're growing, but they're slowing down from the rapid pace. So all in all, it's kind of a mixed bag. But I think going forward, now we start looking at the other inflation indicators, PPI, CPI, PCE. Those numbers will be important.
Kathy, that wages component, which definitely is that direct kind of Fed and inflation ties. We've heard them talk about how important that is. And is there any way to gauge what's specifically at root there, or if any of these strikes and protests that are happening on a big scale are going to change that going forward? I mean, what kind of momentum does that particular
Low tick alert -800.
Yeah, I mean, it trends up, it trends down, right? It is a trending indicator. It's a cyclical indicator. And, what it shows us is that there's no impact yet of strikes or anything in there in terms of the jobs numbers. But I think what we saw underneath it was that the biggest gains in jobs were at the lower end of the pay scale. So leisure, hospitality, and healthcare services, generally lower wage jobs. That's where the big gains were. And you actually saw losses or not very much change in the higher wage area, like information technology, et cetera. So what's showing us is we're pulling in people in the lower wage jobs at a greater number than the higher wage jobs, and that is pulling the entire kind of average down.
Okay. Now, the connection between bonds and stocks so far has been pretty clear, Nate. It's been yields up, stocks down. That's the way basically since July when we had that big GDP beat, durable goods, etc. A day like today, kind of a similar situation. How much should we project, expound out based on that correlation breaking on a pretty important day? It's one day, but it's a pretty important day.
Yeah, it does feel a little bit like a shift occurred here, and it's basically because you get, the double the payrolls number plus the softer than expected wage growth that Kathy was talking about that leads more credence to basically the soft landing narrative. And, the Bears have been in control since basically late July, and you come down to a day like this, and there were a couple of factors. It wasn't just the report, but it was the oversold nature, the near-term oversold nature of the market. The S&P coming within 11 points of its 200-day simple moving average. It's been basically flirting with it this week. You get this nice bounce off of that.
I'm here. I'm just chilling.
1920. If you look over the past 6 months, this is an area where it has tended to top it out. And then so you add all these ingredients into the mix, and it's enough to basically potentially create a short-term bottom here. Momentum, it feels like, is shifted in the bulls' favor. Now we go into earnings next week. Kathy mentioned CPI, PPI. We're going to get that as well next week. We're not it's not a victory. We're not completely out of the woods, but at least from a trading perspective, it looks really good. I'll just say last quarter, the big issue, I think, with the earnings was the low beat rate on revenue side. And that's the important metric because you can't really fake that. So in terms of analyst estimates, we'll have to keep an eye on that beat rate as we move into earnings, basically starting next Friday.
Man, I totally forgot. We got the banks kicking off late next week. So helpful reminder there. CPI, I definitely know about, so I'm thinking about that. But we've been so focused on bonds and the macro, almost forgot about earnings. You also mentioned one thing I want to come back to real fast before we go, Nate, which is VIX. It's funny you mentioned that. That's literally was going to be my next question to you, because 20 kind of being a level that acted as a ceiling for much of this year with a few exceptions. So to some extent, I guess, technically, some of these gyrations could be sort of short-term mean reversion in a way.
Yeah, absolutely. That's the way to use the VIX. If you're looking at the VIX when it's hovering around its lows, it's not a predictor. You can't really use it. It's not going to tell you when a sell-off is going to occur. The healthy way, so to speak, to use it is when you get these spikes, it can tend to signal when there's just the near-term fear or uncertainty has gotten a little bit stretched, and then some mean reversion is likely in the near term. And it appears that's what is signaling again. Just looked over the past 6 months. This is the fourth time that it's crept up into the 1920 area, and then it's pulling back. But it's the confluence of all those other factors I mentioned as well that kind of gives the bulls a little bit of a bang here on Friday.
Okay. Nice way to put it there. It indeed is a nice little bang here, and let's see if you can hear it, because we're rallying still into the close to it right now. Thanks to Kathy Jones and Nate Peterson. Excellent combo. A good preview next week, too. Can't forget about earnings. Be right back for the bell.
Young lady who was in her 30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was heard, we were able to help her. The client how much
That's a wrap. All right, folks. Have a great weekend. Got a hard stop. Take care. We'll see you on Sunday. Weekend video will be out Sunday around 2 p.m. on the East Coast. Take care. We'll see you then. Ciao.